But Costco is up just about 3% so far this year, underperforming the broader market, with the S&P 500 up nearly 13% in that same span. Let's now bring in David Bellinger, senior analyst at Mizuho Securities, who has a neutral rating and a $975 target price on the stock. David, good morning. Thanks for being with us. Take us through, as an analyst, what you are looking for in those results after the closing bell today.
Hey, good morning, Tom. Thanks for having me on. So just given the monthly sales numbers that Costco reports, we already know that they're going to print about 6% same-store sales in the U.S. That excludes the more volatile gas category. And then globally, that's about 6.5%. So very good numbers. We just don't think this is enough for Costco. So a bit of a deceleration from the 8% last quarter. We view this as the consumer's fine in the U.S., but this is more of a Costco-specific story where we see them going through this mini investment cycle. You've got elevated operating expense growth. Last quarter was double digits. We're looking for something similar. So you're just not getting the flow through to the bottom line that we think you need for Costco, especially when it's paired with this very elevated valuation. But if we step back and just look at how the consumer's handling tariffs to date, we think they're fine.
Okay, so if the tariff issue and the consumer seems fine in your mind, there has been scrutiny in the past on the membership side and the membership revenues this company generates as well, because it is a warehouse club that has a membership component to it. What would you look for in terms of that membership growth, either in the actual dollar amount or the people, that would maybe change your mind about the Costco story?
Sure. So that's been an incredibly sticky number. This membership renewal rate is around 90%. Fantastic number. Costco, great operator. They put a lot of value back into that membership experience. Now, this quarter, we are still pushing through some of these membership price increases that went through a while ago. So you probably are going to see another step up in membership income this quarter into the low double digits. We like that. We just want to see more growth, and there's a bit of a choppiness lately because you've had a lot of younger consumers join the Costco membership. They do it digitally. There's a little more churn in that number, so that's something we're watching for. But overall, the membership renewal rates for Costco have been pretty steady.
As you dig into the product mix through the research that you do, the channel checks that you do within Costco, what exactly is the shift, or what would you like to see in the shift in terms of product or sales mix to give you a better indication that Costco is putting its resources and its sales efforts in the right place?
Yeah, they've got a great grocery business, fresh. That's been up mid-single digits. That accounts for almost 60%, a little over 60% of domestic sales. There's not a lot of tariffs that get pushed through there, so that keeps people coming into the warehouse. A lot of frequency of purchasing, great category for them. You want to see more of the attach rate into non-foods, and that's where they're lapping some of these big gains last year. They started introducing gold sales, sold a lot of gift cards. So you've got difficult comparisons, but they've held in pretty well. We want to see that non-foods business start to accelerate again, and then that'll pair with this high valuation. It'll make more sense. Maybe then at that point you start getting some earnings upside revisions, and then the story could work. But until then, we're still neutral on this name.
David, that begs the question. We just got a couple moments left here. If you are neutral on Costco, what is your top pick in your coverage universe?
Yeah, but Walmart's right up there. Walmart's our top e-commerce pick. Year to date, you mentioned Costco's up about 3%. Walmart's outperforming the S&P. It's up 14%. And as they introduce more of this digital business, and you also have alternative and accretive businesses such as advertising, marketplace. They've got their own membership model. They even have Sam's Club that has this warehouse club exposure. So we like Walmart, and there's a true story here where you have EPS around $2.50, $2.60 today. That could easily be $4+ per share in a few years. So we do see the upside story materializing for Walmart here.
All right, David Bellinger from Mizuho, thank you very much for that. And by the way, nice Liberty National flag behind you as well. We'd appreciate it. To Washington, D.C., and President Trump's gold card immigration visa officially on sale at a big discount to the original price tag of $5 million apiece. Now, that could make it much more attractive to the world's wealthy who are looking to join the path to permanent U.S. residency. Robert Frank joins us now. Robert, it didn't seem like it was so long ago that we were talking about the potential for the wealthy folks out here leaving this country, and now we got wealthy people wanting to come back in. So how does that trade dynamics shape up?
Well, Dom, good to see you this morning. The White House saying it's going to make 80,000 of those gold cards available in the coming years. Immigration attorneys and wealth advisors telling me that they expect, based on the initial interest they're seeing already, this thing could easily sell out. Now, with his executive order last week, President Trump announced the new $1 million gold card that grants foreign nationals residency and a path to a green card in, quote, record time. As you mentioned, the price had been $5 million when he first announced it back in February. The price cut of 80% instantly makes this one of the best deals in the global visa market. Take a look at Singapore. Their golden visa requires an investment of over $7 million. New Zealand, just under $3 million. Bermuda, $2.5 million. So $1 million looks relatively cheap. Now, the costs in those other countries, of course, they're considered investments, while the $1 million for the gold card is labeled, quote, an unrestricted gift to the government. So the gold card buyers are not going to get that money back. Advisors say the biggest demand for the gold card likely going to be China, India, the Middle East, Brazil, and Mexico. Now, already 7,500 overseas millionaires are expected to move to the U.S. this year under existing programs. Dom, the gold card probably going to attract even more wealth. Now, for the full analysis of the gold card and the platinum card, which we didn't even talk about, you go to cnbc.com/insidewealth. That's cnbc.com/insidewealth. That analysis, that new newsletter, out in just a couple of hours, so sign up now.
All right, we got to wait a couple hours for this thing. That's fantastic. But, of course, you just read my mind, because when you mentioned the platinum card, you got to take us through the differences, please, between the gold card and the platinum card.
The big difference is taxes. So with the gold card, you still have to pay taxes on your overseas income. That's a rule that applies to U.S. citizens, green card holders, any resident of the U.S., full-time resident. The platinum card, which is $5 million, that allows you to stay in the U.S. for 9 months without paying taxes on your overseas income. So you're not allowed to stay here as permanently, but you get that big tax break. Now, interestingly, President Trump did not talk about the platinum card during that press conference on Friday. It's on the government website. They list the gold card, they list the platinum card, but right now it doesn't seem like they're actually going to issue that anytime soon, because that could take approval from Congress, and that could take a while.
All right, Robert Frank, let's see if they come up with an onyx or a black card anytime soon. Thank you very much for that. We'll see you later on today. All right, coming up in the show, your morning call sheet, including a price target hike for one of the most important stocks in the market. But first, a quick market flash on shares of Lithium America. That stock is up another 30% in the pre-market trade, after surging more than 95% yesterday as the Trump administration looks to acquire a stake in the company. Lithium Americas, LAC is the ticker, up 32%. We're back in a moment. Welcome back to Worldwide Exchange. Time now for your morning call sheet. Analysts at Bernstein raising their target rating on Freeport-McMoRan to outperform. Now, Bernstein says despite ongoing challenges for the company, it sees upside potential for those shares. Now, a very different story from Bank of America, which is cutting its target price on Freeport from $50 down to $42, calling the company's operational challenges a material overhang. So that you got that push and pull. Redburn Atlantic is initiating coverage of Oracle shares with a sell rating and $175 target price. Redburn says the market has materially overestimated the value of Oracle's contracted cloud revenues. Those shares are down 2% in the pre-market. Barclays is raising its target price on NVIDIA from $200 to $240. Barclays says spending around the AI trade in the coming years will likely largely flow towards NVIDIA, making it the most attractive name in the entire space. Well, still ahead on the show, the NVIDIA derivative, our next guest says, could be poised to pop and add to its nearly 25% jump so far this year alone. The mystery chart and that name revealed coming up after this. Welcome back to Worldwide Exchange. Intel may be one of the hottest AI chip plays as of late. Funny to say that, but it's up another, you can see, 3.5% in the pre-market. On the back of that reported investment talk with Apple. But NVIDIA is still the kingmaker, of course, in artificial intelligence, with that share, those shares up more than 1,300%. 1,300 compared to Intel's 18%. You can see in that chart over the past 3 years. But for those looking to play the AI trade without getting too close to the action and the massive volatility that could go along with it from the day-to-day headlines, our next guest is offering up an alternative type investment for that AI trade. Joining me now is Todd Gordon, Inside Edge Capital founder and a CNBC Pro contributor. Todd, we kind of know the AI ecosystem at this point right now. What exactly is undiscovered in your mind that you think needs to be paid more attention to?
Well, I don't know if it's undiscovered, Dom, and good morning. Vertiv Holdings is the name I want to focus on. It's only up 25%. I'm laughing what you just said about Intel up, 19% for the year. Vertiv was up significantly, almost 200% in 2024, has gone quiet, relatively speaking, in 2025, looking to break higher. So what they do, they're a critical power and cooling infrastructure company that keeps AI data centers like cool, operating, and online. They're part of NVIDIA's partner network. They work directly with NVIDIA on these customized liquid cooling and power designs for the big GPUs that run really hot. They have a few competitors, Eaton and Emerson, but they just don't have the customized solution and work as closely with NVIDIA. So, as I mentioned, technically, Dom, the stock has been quiet, relatively speaking, in 2025. It's formed a technical head and shoulders inverse pattern. It's kind of a continuation pattern. If it breaks up through 157, Dom, I think we could reemerge and maybe see a little bit of what we saw in 24. The company is an earnings powerhouse. They beat 14 out of last 17 times. It's fairly valued, trading at about 32 times forward earnings, which relatively speaking is not terrible. So I just increased the exposure in Vertiv from 1.5% in our growth portfolio to 2.5%. So I think we go higher.
All right, so Todd, you are a CNBC Pro contributor. We just flashed the headline from your story up on our website right now for Pro subscribers. Can you take us through from a trader's perspective, because that's what you are, how exactly you would express that view in Vertiv? Would you buy the stock outright, or are there other strategies you use to gain exposure to the upside and perhaps maybe mitigate some of the risk on the downside?
Yeah, Dom, I mean, you and I have known each other a long time. I'm becoming less and less of a trader, not because I'm getting older, but because this is the kind of market where you want to buy high quality, high growth stocks that are leading this AI boom, which I think is still very early, and you want to hold them. Now, time frame is all relative, and that's why you need to have a good financial plan and understand why you're in and out. But I don't think this is a kind of market you really want to trade. I think you want to try to hold this, especially if Vertiv makes the move up. We could be in this for 3, 4, 5, 6, 8 months. Who knows? Maybe 2 years. But hold good quality stocks in here, Dom. Don't trade them so much per se.
All right. And outside of Vertiv and outside of AI, is there anything else on your radar that you think deserves some attention? It doesn't have to be in that red-hot AI trade.
Yeah, it's interesting. You mentioned it. The markets are trying to give a nod to the weak September seasonality that we've all been waiting for. We're seeing a little bit of a value rotation in. I wonder, Dom, if it's not so much as a pure value safety rotation in, but it kind of seems like it's the picks and shovels, it's the architecture. Like, look at the deal that the government did with MP Materials, right? It's mining, it's rare earth minerals, it's the hardware. It's not so much the software and GPUs that are in favor just recently. I don't want to say it's a full, get out and hedge into the end of the year. We're expressing slightly different areas of the market in here. So
sure.
I would say stay long and let's keep those high growth quality AI names. But NVIDIA to 200, I can't wait to see if and when that happens.
All right, Todd Gordon, thank you very much for that. And by the way, be sure to read Todd's full story right now on cnbc.com/pro. Subscribers get all the context and detail behind that call from Todd. Coming up on the show, tapping into the AI trickle-down effect and the sectors our next guest says could be the next to benefit. We'll be right back. welcome back to Worldwide Exchange. We got a news alert for you. The European Commission announcing it's opened an investigation into possible anti-competitive practices by SAP, the European software giant. Now, SAP has responded. It says it does not expect the EU probe to result in material impacts on its financial performance. SAP says it believes its policies and actions are fully in line with competition rules. Nonetheless, those shares down about 2.5% in the trade so far in Europe. We'll see how those shares carry over into U.S. action here. A few things to check on as well while we're tracking this morning. The Trump administration is launching probes into imports of robotics, industrial machinery, and medical devices, potentially paving the way for new tariffs. Shares of some key medical device makers are now moving lower in the pre-market trade. It's a bit more mixed right now. Disney says Jimmy Kimmel's return to the air on ABC Tuesday night drew more than 6.2 million viewers. That is notable because his show wasn't available on broadcast television in more than 20% of the U.S., as station owners Nexstar and Sinclair are not carrying it currently. Meanwhile, Nexstar says it's evaluating whether it will bring Kimmel's show back to its ABC affiliate stations in the future. And sources tell CNBC that the NFL has approved the sale of a minority stake in the Chicago Bears to existing owners of the team that values the Bears at a record $9 billion. Well, back to the markets with the major indices looking to shake off their 2 straight days worth of losses. For more, let's bring in Mark Pinto, head of America's Equities at Janus Henderson Advisors. Mark, this is a market that feels like it wants to take a bit of a pause, but is this the peak, or do you think there's still more room to run?
Well, the market is obviously made up of a lot of different components, and certainly the trends that are driving the market higher, including AI, personalized medicine, we think those will continue. And, you know, that's really become an uneven landscape where you have the mega caps and their very high valuations, you know, artificially driving the higher valuations in the core indices. But if you look beneath the hood, there's a lot of attractive opportunities outside of the Magnificent Seven that are trading at good valuations, that have growth and a lot of potential. So we think as the market continues to broaden, and as we like to say, the other 493 stocks in the S&P 500 get their day in the sun, we still think there's a lot of positive momentum.
All right, Mark, that inquiring minds want to know what goes on that shopping list among the other 493 stocks in the S&P 500.
Well, you know, it's interesting. Your previous guest was talking about interesting ways to play AI. And, you know, when we look at AI, we think of enablers, we think of enhancers, and we think of end users. And certainly the enablers like NVIDIA or Vertiv, as your previous guest mentioned, get a lot of the limelight. But if you look at companies like Howmet Aerospace, which is an end user and essentially applying AI in its business and improving operations, you know, we think that could be the most powerful impact of AI. And it's not the companies that deploy AI, but rather the companies that benefit from AI. And for that reason, we're very excited about the end users. And in a lot of ways, this is a repeat of what we saw when the internet came to life. And sure, the internet providers did a great job, but it was the companies that used the internet and the ability to sell digitally and interact with their customers directly that benefited. So we're very excited about sort of this end user category, and there could be a lot of different companies that fall into that bucket.
All right, Mark Pinto, thank you very much. Keep it right here. Squawk Box starts right now.
Good morning. The Trump administration raising the stakes of potential government shutdown again, getting close. We'll see how we avert this one, hopefully. It's pushing agencies now to consider firing workers that are not deemed necessary. Intel reportedly speaking with Apple about a possible investment from the tech giant, and President Trump now could hit imports of machinery and medical devices with some new tariffs. It's Thursday, September 25th, 2025. Squawk Box begins right now.
Good morning, everybody. Welcome to Squawk Box right here on CNBC. We're live from the NASDAQ market site in Times Square. I'm Becky Quick along with Joe Kernan. Andrew is out today. Let's take a look at what's been happening with the U.S. equity futures. At this point, it looks like the Dow futures are a little higher, up by about 40 points. NASDAQ futures down by 34. The S&P futures off by 5. This comes after 2 days in a row of declines for the major averages. We'll continue to watch and see where things head today. But if you take a look at what's been happening with the Treasury market, looks like the yield for the 10-year is a little lower. It's at 4.14. The 5-year and the 2-year are a little higher. The 5-year is at 3.71, and the 2-year is at 3.60.
Intel reportedly is speaking to Apple about a possible investment from the iPhone maker and about working more closely together. It's a Bloomberg report. Says the talks are at this point in the early stages, may not amount to anything at this point. Also, that Apple is unlikely to switch back to using Intel chips in its products. CNBC has reached out to Apple for comments. Intel shares jumping more than 6% on the news this morning. That's a number 32 we haven't seen in a long time.
Yeah.
On pace, Intel for the best month that it has had in more than 2 years. While Becky reads this next story, I'm just going to hit up a chart on Intel and see, because that...
Back from the
that's exactly what I was thinking. Back from the nearly dead newlywed is what we used to call when I lived in Pasadena. There is that's how long is that?
Go back further. Yeah,
let's
there you go.
Go back a little further.
It shows you
I wonder,
down 35% still over the 5-year period, but some real interest and some major investors that matter, like the U.S. government, like NVIDIA.
We will, I don't know if Katie Stockton follows Intel specifically, but...
Oh, the chart on...
The chart on it, she hasn't said a couple things. The VIX, the NASDAQ, the last couple, the vendor financing with NVIDIA it's right... Got that, was up that day, closed that day down, closed down yesterday.
Yeah.
6 days, what do we got left in September? That's plenty of time.
For September to live up to its reputation?
She says it hasn't yet.
Yeah.
But there's still time. It hasn't, because October, the teens of October are so many lows are made. But
September is
it's usually not great. Not great, and that's where you make a low. And nothing's happened. So I'm not saying it is, but we know, everybody knows about valuations. If you take a ride in a cab in New York or an Uber, then you might talk to the driver about valuations in the mags.
Mag 7, they look at crypto.
MAGA, mega, all mixed up. Maybe it's just me.
Maybe.
Yeah.
Senior White House officials tell NBC News that President Trump plans to sign a deal to facilitate the sale of TikTok today. Once that deal is implemented, TikTok's U.S. operations would be run by a new joint venture company. One official said that Chinese owner ByteDance will hold less than 20% of the stock of the new company. Of course, the question still circulating around what happens to the algorithm, but the latest that we've been hearing on this is that the algorithm would be maintained and monitored by the U.S. investors and operations.
Mm-hmm. Federal workers could be at risk of more than furloughs if the government shuts down in a few days. Emily Wilkins joins us now with the latest from D.C. and the, we'll talk at the end, Emily, but the as expected rhetoric. If you need 60 votes in the Senate, right? Is that what you need?
You need 60 votes in the Senate, Joe, and you got to map the math. There are only 53 Republicans. Some of them have to be Democrats. And look,
but
at this,
how are you going to say? How are they going to say? So okay, so you get all the Republicans. If the government shuts down because you don't get to 60. With a straight face, how do Democrats say the Republicans are shutting down the government?
Well, if you're a Democrat, and we've listened to Chuck Schumer and Hakeem Jeffries, and what they've kind of said is, look, what we want is for some health care provision to be in there.
I know,
they haven't been super specific on exactly what it needs to be, but they're hoping, they want to get that in there, and they do point out that there are these tax credits for the Affordable Care Act that are expiring. That does seem something that does have Republican support. And look, I mean, this is part of what we're seeing with this news last night. This Trump administration going ahead, escalating the stakes of a federal shutdown, putting pressure on Democrats, saying that they're going to implement a large-scale federal layoff if Democrats don't vote with Republicans to keep the government open. Now, the Office of Management and Budget, they're the one who sent out this memo, and they told agencies that they should consider firing employees who would have otherwise merely been temporarily furloughed in a shutdown. Now, the last time there was a full government shutdown in 2013, about 850,000 employees were furloughed. That's according to the Committee for a Responsible Federal Budget. The guidance from OMB that CNBC got says the layoffs should not apply to agencies and programs that were funded in the Trump mega bill. So think things like border security, the military, or those who have programs in line with the president's priorities. But the memo also makes clear that no mass layoffs are going to take place as long as Democrats vote to keep the government open. The agency actually ended their memo saying that they remain hopeful that Democrats in Congress will not trigger a shutdown and the steps outlined above will not be necessary. But at this point, the pressure campaign doesn't seem to be working. Top Senate Republican Chuck Schumer, he remains unswayed. In a statement, he called the move an attempt at intimidation, and he said that these unnecessary firings will either be overturned in the court or the administration will end up hiring the workers back. And Joe, as we were just discussing, again, you need at least 7 Democrats. You might even need a few more, depending on what the votes we saw last time. They're out of Congress right now. They're off of Capitol Hill. They're coming back on Monday. That's when we expect to see the next vote. And this is kind of the back and forth that we're seeing right now. Democrats pushing healthcare and Republicans pushing back.
We all have government shutdown fatigue, and the brinkmanship that both sides play. A couple of years ago, when the Republicans were out of power and the Democrats were going to do it, they'd say, if it shuts down, and the Freedom Caucus, they're saying we want these kind of cuts and we're not going to do it until, and they say, so it's not really us. We want cuts, and if you don't do it...
This time feels a little different.
Yeah, but how it's...
No, this time
it's a
feels different.
Schumer shutdown because they're the minority party. They can't dictate what
I'm not
goes
arguing
into
with you. What I'm saying is this time feels different because instead of compromise, I think they might actually go ahead with this. And the Democrats have been the ones who have been so unhappy about the number of layoffs in the federal government.
You can't say do what we want.
Right.
As a minority party, or else it's your fault the government shuts down.
My guess is this is, look, it looks like a big game of chicken at this point. Emily, I don't know what you think, but I would be surprised to see the Democrats go ahead with it with this new threat that's out there.
Do it.
Because you can say the courts will overturn it, that this will happen, but this has been one of their keys that they've been arguing with the Trump administration since January over is the idea that these government workers are necessary, that these government functions are necessary, and you can't do it without them. If they do go ahead with this, and those workers are furloughed, and there's a number of months or even longer before they're brought back, that undermines a huge point that the Democrats have been trying to make all along with this.
Absolutely, Becky. And you remember back in March, this is part of the reason that Schumer gave for voting to continue that government funding when we were looking at the shutdown just a few months ago. And so now to have this come up, but Schumer now seems to believe, at least based on what he said in the last 12 hours, that he's trying to call their bluff, trying to say, hey, you guys have tried to fire folks, you've had to bring them back. You understand at this point that you can't just let a bunch of people go, and trying to call them on that. I think using
people as pawns is not a popular game that's going to play well, particularly I think on the Democrat side.
This is a sideshow. It's a sideshow. If the government gets shut down, how are the Democrats going to say this is the Republicans shutting the government down because they're not doing what we want? They don't have the right.
And if you shut the government down, how do you get out of a shutdown? What do Republicans possibly give Democrats at that point?
That's right, but they can't dictate what the Republicans need to do with health care or any of these things because they're a minority party. They don't have the presidency, they don't have the House, they don't have the Senate. So if it gets shut down,
it goes back to the
Obama
Obama administration. Elections have consequences. Those were the comments they made.
Whatever you want to attribute it to, they're going to try. They're saying right now that if it shuts down, the Republicans are the ones shutting it down. That's not going to. That dog won't hunt. Is that what you said?
The other issue is
the political implications. I mean, Schumer really got hit last time when he gave Republicans the votes. When he said, hey, we need to go and do this. There were a lot of political backlash for it. And that is, as you consider sort of what's going to happen next, that is a factor you have to keep in mind.
Right. The AOC Mamdani ticket he's worried about. President AOC.
Is there a point that this starts to impact the economy? I would guess. You know, if this is more than what we've seen in recent history, just in terms of a few days shutdown or something like that, I wonder if it would impact the economy if it stretches out over a matter of weeks or even a month or longer.
What we've seen in the past is that, you know, if it's just a couple days, if it's just a week, probably not going to have a ton of impact. But if this does wind up extending like we saw a couple years ago in 2018, 2019, I mean, that had, I think it was $3 billion on the fourth quarter in December for a few weeks. And then I think it was about $8 billion on the start of the year in the first quarter. So yes, this could absolutely have an economic impact. And remember, if there is a furlough, traditionally what we have seen is employees in a lot of these data gathering organizations, BLS, they wind up being furloughed, and that means less data for that upcoming Fed meeting in November.
Emily, do you have can you name 5 things? What do they want? 5 things. I mean, I've seen that there are some crazy asks about, I don't know, health care for people that aren't here legally. What do they want? What are they actually saying Republicans need to agree to for them to get on board? What do they want?
I don't think we have enough time for me to give you the full answer. I'm just going to say the Affordable Care Act tax credits, that is the one to keep an eye on because that is the one that actually has bipartisan momentum.
So they want that, and Republicans are saying no at this point.
They're saying that that's Mike Johnson said that is a December policy issue, not a September issue.
Okay.
It seems
So
like
we
there
won't do
could
it
be a
then.
path forward, but there needs to be a negotiation.
And then if they do get an agreement, how long till we do this again?
November 21st, if they go for the bill that Republicans are pushing for.
I can't. The Ryder Cup starting tomorrow. Emily, thank you. Important things. See you later.
All right, when we come back, we're going to take a technical look at the markets with major averages still near all-time highs despite 2 days of pullbacks. First, though, as we head to a break, let's take a look at shares of German software giant SAP. In the last few minutes, the European Union announcing an antitrust probe into whether the company distorted competition for maintenance and support services related to a management program that it sells. The regulator says it suspects the company of restricting competition by making it harder for rivals to compete. That stock is off by about 1.6%. Stay tuned, you're watching Squawk Box, and this is CNBC.
Joining us on set, take a look at the latest technical signals in the market. Katie Stockton, Fairlead Strategies founder and managing partner, CNBC contributor. So many adages on Wall Street. One is that you really shouldn't short an overbought market. That's usually get your butt handed to you when you do that. Or even valuations never necessarily signal that there's a downturn that's imminent.
That's right. I always caution against shorting anything that's at or near all-time highs. I think that's really not advisable to anyone because it means there's no resistance on the charts, the positive momentum is there, and of course we do have that for the major indices. Shorting has been incredibly difficult. Breadth has deteriorated a little bit just in the past few weeks or so, so maybe some success on the short side with that, but really not on a broad basis.
Yeah, that's what I was leading to, is you never should do that yet. What about the VIX? You point out that it still hasn't done anything, but it's above some technical long-term, MACD?
If you look, it's been stabilizing and now is inching above its 50-day moving average. If it were to also clear its 200-day moving average, that's at 19.3.
So it's 16 and change.
It could happen in a day, though, right? So if it clears that resistance area, that would be a good risk indicator for the S&P 500. So we continue to watch the 20-day moving average as our primary trend following input, which has been one of the best gauges since the April low because it's eliminated all the noise. And the noise has only been with us usually for 2-3 days at a time. So that 20-day has been very valuable, albeit a very simple tool.
I mean, NVIDIA has taken at least, I don't know if it's the only leader, but it is a leader in the market. It hasn't acted well after that news the last couple of sessions.
So the mega caps have certainly diverged. Microsoft, NVIDIA not doing great, but we have huge gains from Tesla, from Alphabet. So they've sort of balanced each other out as a complex, and they're in the contribution, I guess, to the major indices has still been fine. If we lose the support of the other mega caps, especially Alphabet, I think that would be detrimental to the major indices. But listen, I mean, we've avoided the seasonal pullback so far.
Will we avoid it?
I think not, probably, but we don't have the indications yet.
Something between now and mid-October we will see.
That's very natural. Usually you see it towards the end of September. And wouldn't that be a great reset for the market? I mean, if you look around, especially in the AI names, it's extremely overextended in its appearance. Overbought's not a bad thing. That's a reflection of momentum. It's when you see that overbought reading give way to downturns, and you can simply follow that using stochastics or RSIs, and you'll see it on a broad basis, I think.
Intel, I mentioned that, I don't know if you follow it, but does it signal $40 now?
You know, I'm very keen on counter trend setups, and Intel had this prolonged basing phase in place, obviously gapped out of that base, and now has, I think, more upside. It's a confirmed breakout at this time. The initial resistance is kind of in line. Secondary resistance gets you up to 38 or 39. I'm not sure where it is today.
32.54.
Okay, so it would be nice upside follow through. That would be a longer term objective. But even still, I like Intel because it provides almost technical diversity to a portfolio that generally looks a whole lot more like Palantir.
Yeah, gold's grinding higher while yields are going up. I guess that kind of makes sense. But I made the point that yields long term are still pretty low, and gold's almost at 4,000. So there's
and the dollar is just kind of finding a footing in here. So it feels almost like we're on the brink of something to me because the Treasury yields, looking at the 10-year, and also the dollar index are very close to key support on their charts. If we saw the 10-year yields take out about 4%, the next support is 367, but the breakdown would actually target about 322 if you reference support
of the better for
notches.
yields. I thought you said it got back to 412.
Well, it did hold the support,
Yeah.
And if you zoom out, there's a long-term triangle formation, so a breakdown would be a big deal. The indicators on the monthly chart point lower, but on the short term, they still point higher.
That's exactly what the administration wants to have happen, to bring down the 10-year mortgage, the 10-year, so you can get mortgage rates lower. They're tied to that too. Would that be an indication of, okay, we can take this, it's a good thing? maybe good things for the economy, or are people going to panic if that happens?
Well, I think a little pain maybe first, right? And then finally it will actually end up being good. And that's often the case, honestly, when you see these rate cut cycles, getting started, where there's an initial reaction to the downside, but then ultimately it does have a positive impact.
You always talk about when Bitcoin makes a big move, which it did. It's in an upturn, but it has some pretty violent. It can go down 111 today. So in the last week, it hasn't been great. You said support is what, 108 and then 103 or something?
We moved to a bearish short-term bias this week in our research for Bitcoin, just to respect a short-term overbought downturn. But it's within the context of an intermediate-term range that follows a long-term breakout. So we want to be bullish long-term, just out there looking for a better entry point.
Is 103 a better entry point?
108 is about, that's
the
former resistance. I'd love to see it hold there. There are some indications that it might be penetrated, and then the 200-day moving average comes into play.
What's that?
That's, I think, around 103, as you mentioned. So if we were to see Bitcoin come down there and start to see stabilization, upturns in those same indicators, that would be our cue to get back in.
Great. Katie, thank you.
Of course.
Okay.
All right, when we come back, the Trump administration launching national security investigations into certain imports. That could pave the way for tariffs on things like medical devices. We've got the details when Squawk Box returns. The Trump administration launching national security investigations into imports of robotics, industrial machinery, and medical devices. That could pave the way for future tariffs on those products. In the medical field, products could include prescription drugs, syringes, and imported medical equipment like wheelchairs, pacemakers, and insulin pumps. The Commerce Department is seeking comment from affected companies to see whether domestic production can meet U.S. demand. Those are things you don't want shortages in, but they're things we've been talking about since COVID that you would like to see manufactured here in the United States.
Coming up, some of the world's richest people scrambling to get their hands on President Trump's gold card, which offers U.S. citizenship for $1 million payment. That story is next. First, as we head to break, here's a look at yesterday's S&P 500 winners and losers.
MyPitch.com. Good morning, everybody. Welcome back to Squawk Box. We're live from the NASDAQ market site in Times Square. The futures this morning painting a mixed picture, but there aren't massive moves one direction or the other. The Dow futures are up by about 22 points. The NASDAQ off by 54, the S&P down by 10. We have seen 2 days in a row of declines for the major averages, and that's something you haven't seen in a while.
Buying U.S. citizenship is now a lot cheaper, and that's drawing some interest from the world's wealthy. Robert Frank joins us now with more. Morning.
Good morning, Joe. Good to see you. The White House saying it's going to make 80,000 gold cards available in the coming years. Immigration attorneys and wealth advisors telling me, based on interest they're already seeing, they expect this thing could easily sell out. With that executive order last week, President Trump announced the new $1 million gold card that grants foreign nationals residency and a path to a green card in, quote, record time. The price had been $5 million when he first announced it back in February. That 80% price cut instantly makes this gold card one of the best deals in the $100 billion global visa market. So Singapore's golden visa, that requires an investment of over $7 million. New Zealand, just under $3 million. Bermuda's is $2.5 million. Now the cost in those other countries, of course, they are investments, while the $1 million for the gold card is labeled, quote, an unrestricted gift to the government, so you don't get any of that money back. Advisors say that the biggest demand for the gold card likely to be China, India, the Middle East, Brazil, and Mexico. Right now, over 7,500 millionaires are expected to move to the U.S. this year. That's under the existing programs. The gold card likely to attract even more of that wealth. For the full analysis of the gold card, the platinum card, we don't have a black card yet, but maybe, you can go to cnbc.com/insidewealth. That full analysis, my new newsletter, out in just an hour and a half if you sign up now.
Membership has its privileges.
Has its privileges. It even says that on the Trump gold card website. It said, unlock your privileges now with the gold card and the platinum card. So he's definitely borrowing the marketing.
Knowing the president, I think it might stick. He likes gold.
He likes gold.
He likes in the Oval Office and stuff.
Yeah.
Yeah, but I think he'll stick with gold card. So, what are for people that we're talking about that would like to come here, and they can come here already. They can just stay longer. What is the main thing that if they actually want to be? Do they want to come here and live forever as citizens? Do they want to be citizens of the United States?
Yes,
they do.
So again,
I admire that, and I can understand why they.
There has been a huge sea change around the world where the wealthy want to hedge their bets in their country. So they want a backup plan. They want a plan B. That's why we now have an industry that's $100 billion a year of countries selling investments, selling golden visas. The U.S. hadn't really been playing that game. Now $1 million, very quick, immediate, probably very light screening. If you got $1 million, you qualify. That has never been available. This replaces the EB1 and EB2 programs, which were about $7,000. But there's a huge waiting list right now. China and India are already, there's a backlog in the EB1 and EB2 programs. So you've never had a fast track express lane, $1 million gets you in. There's huge, I mean, the investment advisors I talk to say they think they can sell hundreds of them, each of them already.
No, not knocking the program itself, but if it's replacing the program that people can buy their way in for $7,000, do we risk losing intellectual power from young and kind of startup places that the immigrants we might have been powering things in the past for us?
Yeah, that we won't know what that impact's going to look like for years. The programs that it replaces, the EB1, EB2. This is not, the Trump Gold Card is not a new program. It's just a new label for EB1 and EB2. Those programs were extraordinary achievements for EB1, and EB2 was sort of extraordinary abilities.
Yeah, I don't have any problem with that.
That's sort of subjective, and so the question is, who was getting in that program? Did they really meet those standards? And what countries did they come from? And will it change? Will that profile change under the gold card and maybe the platinum card, if that ever comes to be? And we just don't know. We don't know who's going to get it, what kind of screening, and the people that have already tried to sign up through the website. There's no actual application process yet for the gold card. Well, still a bit of a mystery.
Trump ruined it. It used to be a hell of a lot easier under Biden. It was like, what, $5,000? In Tucson, right? You could get across the back of it.
Again, I don't have a problem.
$5,000 instead of
paying $1
million now?
Yeah.
That's
paying $1 million
inflation.
to get in. I don't have a problem with that. I don't have a problem with the gift. It looks like a quick bunker buy if you're the wealthy somewhere else and you're looking to do it. But I would like to see that we're still taking people based on merit and people we think can help this country.
And my point is, even though $1 million sounds like a lot to most people, there is huge demand already for this.
We didn't even get to $5,000. Somebody else got it under the Biden.
That's right.
Under the Biden program. So, thank you, Robert.
Thank you, guys.
All right, when we come back, we're going to talk more about a potential government shutdown with two former Washington number crunchers. Stay tuned. You're watching Squawk Box, and this is CNBC. A government shutdown is looming with a deadline for any deal approaching at midnight on September 30th. That's Wednesday of next week. Joining us right now is Douglas Holtz-Eakin, who is former Congressional Budget Office Director in the George W. Bush administration. He's now the president of the American Action Forum and former Office of Management and Budget Director under President Biden. Shalonda Young, she's a visiting fellow at Georgetown University. And we called you guys the number crunchers, but I think the reason we really need to talk to you today is because you're also political experts and kind of whisperers of how things work on Capitol Hill. Doug, I would ask you, does this time feel different to you? Do you think we are in for a more prolonged shutdown than we've seen in recent history?
It doesn't look any different to me, Becky. Thanks for having me on. This is a simple moment. You either shut the government or you don't. No one should want to shut the government, and we have a route to go forward. There's a House-passed continuing resolution that would take us to November 21st. The Senate can pass it, and they can go back to negotiating the outlines of the budget, which is what we need to do. Stay at the table, keep negotiating. So that's the only decision that has to be made, and don't see any reason why that's different now. I mean, they had the same decision in March, and they made that decision and we went forward. So this is the same vote. Democrats supported it before, Republicans supported it before. They should support it again.
Shalonda, the president upped the ante last night with this memo that the White House put out saying that if these employees are furloughed, the agency should look at ways of potentially getting rid of them for good, not bringing them back, has kind of been the gentleman's agreement to this point. Where do the Democrats go from here?
I agree with Doug on one point. You normally see this kind of theater leading up to the September 30th deadlines. But what's different is exactly what you pointed out, this threat, basically, this smokescreen to take people's view, intimidation, really, to say we will use this to fire employees if Democrats don't vote for this bill. You also saw a meeting scheduled between congressional Democrats and the president abruptly pulled down, and that's a big difference. When I was in the middle of these funding fights, the one thing you had to do was talk. You had to negotiate. We didn't default because we worked with Kevin McCarthy when I was the director of the Office of Management and Budget. So the easy thing to do here is not just ask Democrats to vote for something that has been used to carry on things like tariffs and other parts of this administration they disagree with, but sit down and have a real negotiation, talk like adults. That's the normal way to do things in this town, in addition to the normal theater we see that is coming out of the White House.
Doug, you think this is theater, or you think that this is take it or leave it?
This is, the staffing levels at agencies have nothing to do with whether we vote to shut the government or not. The president can make those decisions now. He can make those same decisions in November. The only decision is whether you vote to continue the funding levels. And I'll point out, these are the funding levels that were decided upon by the Biden administration. We did a continuing resolution to carry them into this year. The only decision is, do you want to carry them again for another, couple of months to November 21st? That's a decision. Democrats and Republicans said, yes, let's do that in March. They should do it again. Government doesn't close. They continue to negotiate. It's not complicated. The rest is all, theater and those surrounding stuff that goes with it. It's not a budgetary decision. The only one there is up or down.
Yeah, Shalonda, the Democrats may have overestimated their leverage in this situation.
I would say this isn't about leverage, it's about doing what you think is right. The one thing the minority party has is their vote. So do you agree with the way things are being done with a bill that you voted for? And the obvious answer is absolutely not. I wish this was the funding bill being carried out the way that we negotiated when I was the director of the Office of Management and Budget. But what you're seeing is a handshake agreement on these bills, Democrats voting for them, and then a partisan vote on rescissions and impoundments made solely by the administration. So a handshake on Tuesday and a taking away on Wednesday. That's not been done before. And that is an extreme change in normal operations between the parties, and those aren't real deals. You can't ask someone to go along with something and then come along and completely obliterate that deal on a partisan basis. And that's what we've seen since March.
So when the Republicans were going to do this and were asking for things, and they were the party that was out of party, or that was out of power, and they were saying, if you don't do it what we want, we're not going to keep the government open, but it's going to be your fault for not doing what we want. And Democrats just rolled their eyes. It's like you're not in a position to dictate. And that's the same thing now. It's just the shoes on the other foot. The Democrats are not in a position to dictate what goes on here. It's like Doug said. It's like take it or leave it. If you don't, you're shutting the government down. If Schumer tries to say, "Oh, the Republicans are shutting," no one's going to believe that. People are going to roll their eyes.
The last time I checked, we're not in a parliamentary system. We're in divided government. Congress has an equal say in how this goes.
Then have your say and shut the government down, but the Democrats will be doing it.
Hey, I bring you back to debt ceiling talks. As someone who spent 3 weeks without seeing my kid, and Kevin McCarthy saying, hey, you want my votes? You want to avert a default? Then you got to sit down and talk to me. Same deal here. What's changed?
Doug, what has changed?
I don't see that anything's changed. I mean, we've seen one offer on the table that says, look, the right thing to do is run deficits that are $1.5 trillion larger over the next 10 years if you don't want to shut the government. That's not a serious offer. I don't think Shalanda thinks it's a good idea to run the debt up another $1.5 trillion. So have a discussion about what's actually on the table, which is, do we want to run the government until November 21st? And in between, figure out the appropriations bills. The appropriators can solve that problem. They do it all the time. I just don't understand why these other extraneous things have been brought into the discussion. This is a simple decision. The same decision was made in March. It was successful. Do it again.
Okay, Doug, Shalanda, I want to thank you guys both for being here. Obviously, we're on a countdown over the next week, but we appreciate your time and your thoughts this morning.
Thank you.
Thank you.
I don't know much about Shatner, but there's some type of medical emergency, so I'm worried. Rushed to the hospital. But we'll talk, we have another market
William
flash.
Shatner?
Yeah, he's 94. He's my idol. He's still in The Amazing Race, swinging on zip lines when he was 93. Looks amazing. An issue with his blood sugar while at his LA home. Hopefully, he says he's doing good. Hopefully, he'll be fine and back out. Market flash. Eli Lilly has halted study of an experimental drug on patients with diabetes and obesity designed to prevent patients from losing too much muscle. That's according to U.S. Registry of Clinical Trials that was updated late yesterday. It says Lilly closed the trial on June 10th, less than a month after it started, citing strategic business reasons. A similar study is still underway on patients who have obesity but not diabetes. It's hard to keep it all straight because, right? It was
ABC is reporting, ABC in Los Angeles is reporting that his agency, Talent Works, said the actor's fine and the online reports are false.
All of the online reports are false that he even went to the hospital? I hope that's true.
I don't know. This is what Shatner's agency said, that those reports are false, that this is just what Talent Works.
TMZ report, the New York Post is reporting it as well. TMZ's reporting, so they're saying he's fine. I hope he is. Yeah,
this is just ABC in Los Angeles at 3:50 a.m. reporting that Shatner's agency said those reports are false.
I'm hoping for that.
Yeah.
I'm hoping for that, and all these other ones are wrong, which it's trending. Coming up, sports news. We're told the NFL Chicago Bears have received approval to sell a small stake, giving the team a much bigger valuation than just a year ago. Details when Squawk Box returns. Sports news this morning. Sources telling CNBC that the NFL's Finance Committee has approved the sale of about 2.3% of the Chicago Bears to existing owners of the team. The deal values the Bears at close to. That's why we're interested. It's only 2%, but if it was 100%, it'd be $9 billion. Not bad. According to CNBC's official NFL team valuations, the Bears were valued at $6.4 billion just 1 year ago. And you heard Alex's, or maybe you heard Alex Sherman's report yesterday about Goodell, Roger Goodell, his conversation where Goodell's saying, look, we can barely keep up with how the popularity increases
Basically.
in NFL media rights. And
Right, we shouldn't have signed that long-term deal because we think we are leaving money on the table.
Basically.
And we want to renegotiate early or else.
Exactly. And it is, I was glad when it started again. I was hard to bet on baseball. Reds lost today last night.
Oh,
Mets
how
lost.
far are they back?
One. Tied with, but the Diamondbacks.
Diamondbacks have
They're tied with the Reds, and the Mets are 1 game ahead.
getting close to October.
It's like 4, 5,
Getting
6
close to
games
October.
left. 4, 5, or 6. I forget how many games. Hardly any left.
It's a race. When we come back, AI for the long haul. We're going to speak with the CEO of autonomous trucking company that is set to go public on the NASDAQ today. Squawk Box will be right back. Welcome back, everybody. Later this morning, autonomous truck technology company Kodiak is going to begin trading on the NASDAQ after completing a SPAC transaction. It's changing its name to Kodiak AI, and joining us right now on the potential benefits of AI-powered trucking, that means trucks that are driving themselves, is Kodiak's founder and CEO, Don Burnett. And Don, thanks for being here today.
Thanks for having me.
I did not realize how these things are already on the roads, at least down in Texas at this point. Why don't you describe what the trucks are, how they run, and what the AI component is?
Sure. So trucking is obviously a huge part of the American economy, and one of the big challenges over the last several decades has been driver shortage and challenges that drivers face on the road. And so we've been working to automate the trucks with AI technology that allows them to effectively drive on their own. And our first commercial deployment is out in West Texas with a company called Atlas Energy Solutions. And we have now 8 trucks that are fully driverless, meaning there's nobody in the cab, out operating on a daily basis.
And they're out driving. You picked this area of Texas because it's fairly remote. There's not a lot of traffic on the road, but there is other traffic. It's not a closed loop.
Absolutely. So there's actually quite a bit of traffic, and in particular, there's a lot of close quarter traffic. So we have a lot of oncoming vehicles, heavy trucks, big vehicles, pedestrians, pretty much everything you would find on any road network. But it is fairly remote, and it's a great place to first deploy the technology.
But they're trying to go a certain MPH, obviously. If someone's in their way, they have the capability on a 2-lane highway of passing.
Absolutely. So we're operating off highway today, but yes, they can pass stop traffic. They can yield for other traffic. They follow all the rules of the road. All the rules still apply.
Well, unlike most, the professionals are actually good. I'm shocked when a pro driver stays in the left lane, and we're trying to get around it, and it's like, I know you know better. I know you do because you're a pro. But so they're going to do what a really good truck driver. I'm worried about with driving cars. You worry about, hey, if you want to go around a driverless car, that's your problem. You're not going to kill me. One of these things on the road, I worry about.
Yeah,
it could be coming. I don't know. I worry that truck could kill me. I shouldn't.
You shouldn't. So safety is always our first priority. And as you said, our trucks are programmed to be conservative. They're going to sit in the right-hand lane, minding their own business. They're not going to cut you off. If they're going to pass, they're going to pass cautiously. They're going to pass when there's an opening. And so they're going to abide by the speed limit. They never get drowsy. They never drive drunk.
Right.
They're always paying attention 360 degrees around the vehicle.
You have 3,000 paid hours of these driverless trucks to this point. Have you had any accidents, had any issues?
We have not had any at-fault accidents with our system.
At fault? Was there somebody else?
We've had situations where we've been hit primarily in the trailer by other vehicles. Absolutely. It's happened a handful of times. But that's the reality of being out on the road. That's the risk that you have to undertake. But our system is incredibly cautious, incredibly safe.
What happened when somebody else hit one of the trucks and there's nobody in the truck? Like, how did they react to that? How does law enforcement react to that?
Yeah, the trucks are actually detecting whether they've been hit. So we're monitoring all around the truck. So we see when there's been a collision. The truck safely pulls over to the side of the road, and we have a 24-hour monitoring system, which allows a human to then go in and review the material, communicate with law enforcement, and handle the situation on the ground.
But that's, wow. I'm sorry to dig down into the details. I know you got a lot of other financial stuff to talk about, but I'm just thinking, if I hit a truck, there was nobody in it, and then somebody from the company came and said, yeah, it was your fault. Show me that, prove that to me, and how do you play that out? Well, what happened in the instances where this has already happened?
Well, the great thing about our trucks, in addition to real-time monitoring of the scenarios, that we're logging all of that data. We have cameras, we have LiDAR, we have radar, so we know the speeds of all the vehicles, we know where they are on the road, and we're logging all of it, and so we can effectively replay the entire situation in a lot of detail.
Did anybody get hurt in the other cars that hit?
No,
trucks?
we've never had any injuries.
Okay. What's the plan from here? If it's effective here, I would assume that regulators in Texas are probably more lax than you would get here in New York City or somewhere. I see one of the trucks right across the street in Times Square. But how long before we see the trucks in urban areas, in metro areas, in suburban areas?
Well, we're working hard to scale the operation. We're starting in remote locations for safety reasons. We want to make sure we take a crawl, walk, run approach to this, but gradually over the next coming years, you're going to see an expansion of the rollout. You're going to see more trucks on the road. You're going to see more efficiency from these vehicles, and eventually they will be ubiquitous across all roadways.
How expensive is it for you to get the startup on this? How much capital do you have to pour into this? And then how do you make your money? You charge a service fee basically per hour or per mile?
Yeah, so this is a driver as a service, as we call it. So we effectively provide the service that a driver would typically bring to these companies, and they would pay us on kind of a fixed rate. So we provide the technology, the hardware, the sensors, the computers. Our customers buy the trucks, so that's an important one for Kodiak. Our customers own and operate their own vehicles. We are an asset-light company, and then they pay us as a service fee on a regular basis to operate and drive the trucks.
How long before the company's profitable?
We haven't given any guidance exactly on profitability, but we're really proud of the fact that we actually are delivering driverless revenue now, which is something that not a lot of other autonomy companies have been able to say.
Yeah, it's been a long time coming, but it is very interesting to see the progress. Don, good luck at the opening bell today, and we appreciate your time.
Thanks for having me.
If you mess up the opening bell, we're going to think your trucks are not safe either. You know how to do this, right? Did you practice?
I've been practicing, that's right.
I hope you practice.
Yeah.
Is there a program? Well, let's say a little kid is in the back and goes by and goes like this. Can the truck pick up on that and do the horn for we're going to miss the drive.
We've talked about
no,
that
you haven't.
For many years, and unfortunately, there's two horns in a truck nowadays. You have the standard horn, which is more an automated system, and then you've got the loud horn where you actually pull it. Yeah. That's fully manual, so we don't have control over the loud horn, but it's something that we may add down the line.
You just give a little beep, 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 beep. Right.
See. These are the kind of things people love. LiDAR, right?
Yeah.
Okay. Is that the best way?
We believe a comprehensive approach to sensing the environment is the safest today. So that's why we have both camera, LiDAR, and radar.
Mm-hmm. Thank you.
Thank you.
7 a.m. It's past 7 a.m. because of that last minute. On the East Coast, you're watching Squawk Box on CNBC. I'm Joe Kerner along with Becky Quick. Andrews off today among the top stories. Intel has reportedly spoken with Apple about a potential investment from the iPhone maker and about working more closely together. A Bloomberg report says that the talks are in early stages and may not amount to anything, and also that Apple is unlikely to switch back to using Intel chips in its products. CNBC has reached out to Apple for comment. The Office of Management and Budget told agencies in a memo obtained by CNBC that they should consider firing employees who would have otherwise merely been temporarily furloughed in a shutdown. Talking about that. And senior White House officials tell NBC News that President Trump plans to sign a deal to facilitate the sale of TikTok. He's going to sign that today. Once the deal is implemented, TikTok's U.S. operations will be run by a new joint venture company. One official said Chinese owner ByteDance will hold less than 20% of the stock of the new company. Checking the futures this morning, you can see that it's mostly flat. Let's get to Dom Chu with a look at this morning's pre-market movers. Dom's been up for a while. You should know these by heart since you.
I do.
You did Worldwide Exchange.
Yeah, we've done a lot of these updates for our viewers already this morning. So we will, Joe, Becky, good morning, first of all. We will start off with shares of Lithium Americas. We mentioned it in Worldwide Exchange. We'll mention them again because they are up about 9.5%, which is off the gains that we saw earlier in the 5 a.m. hour this morning. This is, by the way, on top of the 95% gain that we saw in yesterday's session. That jump came after the White House announced it would take an equity stake in the Canadian mining company. Lithium Americas is the majority owner of the Thacker Pass mine in Nevada, which is expected to become one of the largest sources of lithium in North America. That stock hit a session high at more than 100% over Tuesday's close. So Lithium Americas, a little steam coming out of that right now, but still a massive two-day surge. Sticking with the mining side of things, shares of Freeport-McMoRan are rebounding just about, maybe about 1% or so after Wednesday's 16% slide. Two contrasting upgrade-downgrade calls this morning. One from Bernstein, one from Bank of America, respectively. That comes after the mining giant lowered its forecast for quarterly copper and gold sales. Issues at Freeport's Indonesia unit was weighing on their outlook there. So, because some of those competing analyst notes are out there this morning. with those Freeport shares. And finally, we have Open Door. That stock is higher in the pre-market trade after Jane Street disclosed a 5.9% stake in the company in an SEC filing. The stock surged about 16% on Wednesday after upbeat home sales data coming after a roughly 30% decline over the 4 preceding sessions. But over the past year, those shares are up about 300 or so percent. So keep an eye on Open Door shares. Joe, I will send things back over to you guys.
Okay, Dom. Very good. I know you're excited. It's all happening tomorrow.
Let me tell you, Joe, Becky, when we were out there yesterday, it was the practice round, right, ahead of the opening ceremony. It was a huge scene there for a practice day. I can't even really imagine what it's going to be like on Friday through Sunday. So.
And then you got U.S. fans who got our butts kicked recently a couple times, and they're from Long Island.
This is going to be a fun one. I mean, Joe,
I'm scared.
I think you've played this course before, right?
I have not. It's a Tillinghast.
It is a Tillinghast, and it is a
hard.
Tillinghast on steroids. I would call it.
It's like it has warning signs like an advanced skiing slope. It says,
like a
do
double
not
diamond,
enter
yeah.
here. Do not enter here. We don't want you on our course if you're a hacker.
Here's what I would say. I would say it's America's country club for a reason, right? It's a top 50 golf course in America. It is publicly accessible. You can pay a fee and just get out there and play. But for those people in our audience who have played it before, they kind of know what I'm talking about. It is one of the tougher walks in all of golf that I've done. Once you think you've done it all, gotten to the 14th, 15th hole, you finish off with 3 tough ones. So it'll be fun to watch as a viewer.
You have to pay for a colonoscopy too, but you at least get some anesthesia. You know what I mean? Not out there.
It's going to be fun to really watch there, Joe.
Yeah, it's fun to watch.
It'll be fun to watch them struggle like I
You
did.
remember Kalk, who I mean, I don't fault him for being that emotional, but these guys are into it. And if they let their team down, you could see some tears. I mean, it is like nothing else in sports.
You know, Becky, Joe, I would also say for those people who have watched the Ryder Cup in the past, the paper and the academics go out the window. The best players out there have gotten their butts kicked, and when you think they should be doing better, so it's going to be compelling TV to watch, no doubt.
I think that was the Ocean Course, which we've talked about recently. You've played that down in.
Yes, sir.
Yeah, you played the Ocean Course. I think that's where Calcavecchia was when it got. I can't remember what happened. It was bad though. I think we lost that year.
Yeah.
Anyway. We digress way too much, but Golf Channel is our sister network now and in the future.
Yes.
Now and forever.
I hung out with a lot of them yesterday. It was a lot of fun. I'm telling you, everybody there is pumped for this weekend's coverage.
Are they pumped for? Are we going with Versant or? I like the French pronunciation. I feel more cultured. Versant. What do you like?
Versant, because it's like conversant.
It's like conversant.
This isn't Golf National de Paris. So.
Don, thank you. We'll see you a little later. In the meantime, we've got some news from Starbucks this morning. Let's get right over to Kate Rogers. She's got the latest on that. Hi, Kate.
Hi, Becky. Starbucks is filing an 8K that says its board has approved a restructuring plan that will involve the closure of coffee houses and further transformation of the company's support organization as part of its Back to Starbucks strategy under CEO Brian Niccol. The company expects that a majority of store closures are going to be completed by the end of the fiscal year and estimates that it will incur approximately $1 billion related to the store closures, support organization transformation, and other restructuring activities. About 90% of those expenses are going to be attributable to the North America business. So overall, company-operated stores in North America will decline by about 1% in fiscal year 2025 after accounting for both openings and closures. The company further expects a significant portion of these charges, again, will be incurred in fiscal 2025. A reminder here, Back to Starbucks strategy, this filing says focuses on revitalizing the coffee houses and enhancing the customer experience. The filing also says the company assessed its existing store portfolio with respect to both whether its coffee houses had a viable path to offering the physical environment that they feel is consistent with the brand and a clear path to financial performance. It's going to close those coffee houses that do not meet the criteria. The company is also working to build a stronger and more resilient Starbucks, it says, and prioritizes investment closer to the coffee house and the customer and further restructuring its support organization. Back over to you guys. You can see the stock is just slightly higher on this news.
Yeah, Kate, it looks like they're laying off 900 more corporate workers as well. They say they're going to plow all that money into improving the cafes. it looks like Nichols trying to streamline things, make it
Certainly.
a little easier.
And just a reminder, Becky, as you talk about those 900 layoffs, they did lay off about 1,100 employees, many of them corporate headquarters earlier this year, and they are going through those cafe uplifts. They've done they're projecting rather about 1,000 of them will be kind of revamped in the year to come. So definitely streamlining, as you said, focusing on the stores that are working under this new Back to Starbucks plan and moving away, they did say in the most recent earnings report, from mobile order and pickup because they want a different experience for the consumer.
Okay, thank you.
Mobile stores only, Becky. Sorry, I should say. Thank you.
Mobile only stores, right. Okay, thank you. When we come back, we're going to take a look at how the Fed's new rate cutting cycle will impact the markets and the economy. And later this hour, taxes, rising energy costs, affordable housing, all big bailout issues in the race for New Jersey governor. Republican candidate Jack Ciattarelli will tell us why he thinks he's the right choice for the Garden State over his Democratic rival, Mikey Sherrill. That's coming up at 7:30 a.m. Eastern Time, and Squawk Box will be right back.
I'm here. I'm here.
He's here.
Yes, I am. Looks like we have a market sell-off. How did I get up there? Somebody ripping around my computer today? Answer the questions. You're under arrest. Woo! Double bottom. It's a pretty good yin yang also. How much time do I got? I still got time to cook me some coffee. Oh yeah, put it right there, 6:57. We're right at the pivot point. We have a support channel. Well, got a lot to talk about today. The girl that called me a narcissist, I didn't call her back. So she's shit out of luck. Woo! You don't want to do that.
It's really, I don't know. People really need to buy your book if they can just go to ChatGPT.
I'm pulling your book. I'm pulling. My book isn't about. My book is about how you should use ChatGPT
No, it isn't.
Yes,
No.
it is.
Oh, it is.
Yes, it is.
Oh,
It's
it
all
is?
It's called Kramer
Wait,
GPT.
what are all the other pages about then?
No, this is about how to own individuals. What an individual.
Was Chat a ghostwriter?
Oh,
Jim Cramer. and ChatGPT.
Jim Cramer, how to make money in any market.
Just using ChatGPT. What's that with that?
As one of many inputs.
Yes, and including you. I say in David Faber.
Ignore
That's not true.
Ignore him. Ignore
Right,
Faber.
right. No, because Faber doesn't exist after Vera Rubin comes out.
Money in
I'm
any
just
market.
talking. I go back to you. This is called energy fuels, okay? I am saying that if a stock is up 228% and it doesn't make any money,
Yeah.
that is a doubtful stock to own
Without a
between
doubt.
here and your end.
Last night on Mad, you made a interesting, good
Yeah, I
call
said
saying maybe it's time to pull away
Well,
from
because
low
I've been
speculative
saying,
gains.
listen, I can't take it anymore. Buy these. And last night I said, no, I can't live with myself. Energy fuels, no. Okay? All right?
Aqua, no.
Aqua, no.
And
Aqua, no.
instead,
No.
you go to proceeds go to.
We wait till things come down.
All right.
Aqua, no. It's like a dog. Aqua, no.
No.
Yeah. We have a dog called
Don't
Tony.
name your
Tony, no.
Don't name your dog Aqua. That could
No,
be trouble.
but NVIDIA, if you look at when I named that in
Yeah.
in
Worked out pretty well. It's worked out
Right.
pretty well.
But what I'm saying
No
is
doubt.
take a breather on the
Okay.
real ones, but accept the fact that we have so many stocks that are up 200 and 300% that we just have to say, listen, those are going lower, and they should go lower because you should sell them.
Now on to TikTok.
Well,
Now
that's real.
Two senior White House officials are telling somebody.
What did they tell?
NBC News. President Trump is expected to sign a deal today. It would facilitate the sale, of course, of the dominant app here in many ways among certainly a certain demographic. It would be the U.S. operations separating from. We've been through all this. We'll see what we actually get. If there's anything new we learned today, guys. We've outlined this, the way this deal would look. Many others have done the same. It remains largely the same. Still want to wait and see who rounds out the full investor group. Remember, you're talking about some of ByteDance's owners, whether it's Susquehanna or GA, coming in, providing new money, potentially, or for the entity that will then license the algorithm from China. Then you've got 30%.
as 50% absolutely new money, and then 20% roughly would be owned 19.9 by ByteDance, which is the parent company.
Wow.
I made the point many times, of course. We focus here on TikTok, but from an investment perspective, TikTok's not going to be obviously a public entity in any way. So ByteDance is going to be very interesting, I think, in the future. Will it go public in Hong Kong? What will its plan be? You're talking about a company that's generating income of as much or more than about 15 billion this year.
Just how much bigger is this than Reels?
Keep going up. I mean, they're enormous.
Oh, God, don't say half a trillion, please. That's the number now.
No, 100 billion in cash. I'm talking ByteDance. Yeah, one of the largest private companies
You
in
talking
the
about
world.
500? Everyone's talking about 500.
Well, I think that's the hope of some of the investors in ByteDance who've been in there for quite some time, Jim, sort of just sitting around and waiting.
True.
This has been one key transaction, as we reported, I think it was last week, maybe it was 2 weeks ago. It's going to take a little longer for it to close. And again, we're still waiting to hear some of the other names. We've reported on a few. I don't know. That's President Trump has said Michael Dell. He's also mentioned the Murdochs. I heard some names, but then they were shot down, so I haven't reported them. But so we'll see. We'll see what we end up with in terms of
David,
what represents
that's
that
just
new money coming in.
That's amorphous, what you just gave.
Thank you. Thank you. That's why I like to keep my reporting amorphous.
Well, you just blasted my book. I'm actually reporting all I want.
I just raised a key question about your book. And for all of
I'm saying that
as our relevance continues to run down.
I'm saying the GPTs allow you to analyze stocks like in both versus what I did when you said the New York Mercantile Option. All right, I'm just okay. Let's go back to the.
Can we go back to TikTok?
Yes, I want to go back to TikTok, Carl. TikTok is a lot like OpenAI. We've got these valuations and Tether. People speak of valuations of between 500 billion and a trillion.
No, not for TikTok.
No, for
ByteDance.
For ByteDance.
Yes.
And I am saying when I hear this 500 billion, which like Tether wants a $500 billion valuation. I'm hearing that OpenAI 750 billion.
Yeah, but ByteDance has 100 billion in cash and 50 billion in net income, Jim. That's not. That's different than the speculative realm you're trying to make.
That's true. That's true. I am just saying that the numbers are so immense.
Yeah.
That's all I'm saying. The numbers are immense. I'm not saying that they're not believable because I do think that core is worth something.
The numbers are completely immense. By the way, have you figured out what that 100 billion from NVIDIA going into OpenAI is structured as? Is it equity? What is it?
We don't know. It's amorphous, but it is an investment, and if OpenAI is worth 750 billion, then that's going to be a pretty good investment. No, but Carl, I just don't like the sound of everything. I mean, especially when it comes to quantum computing, when it comes to nuclear, and when it comes to Bitcoin. I'm worried.
Yeah. We're going to get to, there is news on CoreWeave today. We'll get to Starbucks as well, ramping its turnaround plan with a new round of layoffs and some restaurant closings. There's a fair amount of checkered corporate commentary. We'll get to KBH, Accenture, CarMax today down 17.
Yeah.
Take a look at the pre-market. Be back in a minute.
I'll be right back.
Okay.
Hi, Andrew.
Welcome back. Shares of Starbucks ramping up its turnaround strategy. The coffee chain says it's laying off about 900 corporate employees, closing a number of locations as part of this restructuring plan. In a letter to Starbucks North American partners, Brian Nichols says, quote, "We identified coffee houses where we are unable to create the physical environment that our customers and partners expect, or where we don't see a path to financial performance, and these locations will be closed." Jim, interesting piece of this turnaround. And we've discussed a lot about throughput and pricing.
Starbucks laying off corporate 900 corporate jobs. I mean, how in the heck do you get that many 900? I remember when they got in this big expansion idea of opening up stores. I mean, hundreds of stores a year. And I said, this is out of whack. Same thing happened with Kava. They go out and they open up all these new stores and locations that, I mean, I don't shop at Starbucks. I won't go there. I won't even buy their coffee anymore because they got in politics back during the Obama years. And I said, I'm just out of, I don't need to waste, you know, $5 a day on a coffee when I can make 20 of them at home for the same price. So I went out and I started buying beans. I'd buy 5 pounds of beans at a time until I got ripped off at AM Coffee when I ordered some real expensive coffee. And I knew how this stuff tasted. It was supposed to be the best, the East State of Blue Mountain coffee. And that has kind of like a chocolatey flavor. I mean, it's just a great tasting coffee. And I ordered this East State stuff, and it was like $50 a bag. And I ordered 3 of them. And I called them up. I said, this does not taste like good coffee. It tastes like your round the house Folgers. And I complained to them, and they said, well, you got to ship it back to us so we can test it. I said, test my ass. I ain't shipping this back for you at my cost. I'll give it away, but I ain't drinking it. And I said, you lost my business. You know, I buy 5 pounds a month from you, and I give away about 3. Every single month, I give away beans, you know, Sumatra, Peru, and places where I thought good coffee. You know, it was good coffee until I ordered that, and I was ordering Jamaican Blue Mountain, and then I ordered that Estate, which is supposed to be the best, and it didn't. It tastes horrible. And I paid $50 a bag for it. Not a big bag, you know, a bag, a regular coffee bag, you know, you buy at the grocery store. Let me see if they still have it. Well, $69.95 now for this shit. one of the highest quality coffees available. And it was 49 or 50 when I bought it. Horrible. And I got 3 bags of it. The taste isn't as robust as the first bag. Only made 1 cup. Good. Well, they loved it. Another one says great. But I said, I gave it a 1 star. I said, this tastes like shit. And I told him I ain't buying coffee from you no more. Look about how much I probably gave you $2,000 worth of business. And then on Christmas time, I'd buy at least 20 pounds and give away 20 pounds of it away. Not this. Yeah, you got it on special here. The Hawaiian Kona I've bought from them before. Sumatra I bought a lot of. I like that coffee. But they got this on sale here. $40. Probably can't sell it at that. Okay, we got 2 minutes. Done with my rant. Right out of the gate, we should have a bounce. Because we held up that support channel. I'm a coffee guy. I buy the best. Looks like we got some good news on the 25 minimum equity rule for pattern day traders. That's another thing that screwed me back during the Obama years. I had a small account, and then they applied that stupid rule. And I'm in Oracle, so Oracle's not that good here. Let's see if we can get a... Okay, we got a triple bottom here on SPY. Watch these things be expensive. There's 658s or the 660s. Do re mi fa sol la ti do. Goolsby says the thing that's most worrying is possibility of inflation rising proves to be persistent. Goolsby, They're trying their breast. I got cleavage on my mind. They're trying their best to do the best. There's got to be a theory behind that. Oh. I would rather trade the SPY, scalping, calls, lotto, strike, 658 at 115. There's my first trade of the day. We're at 125. $125. Thank you very much. Hike. I'm going to see if I touch the bottom of this channel. I'd scalp that for 10 cents. $656.77, no lower. Or actually, we might have a 1-2 3 bits. $657.25 for a double bottom, or 18. Okay, prepare ye in the name of the Lord. Second touch. That's going to be our pivot point. 657.19. Oracle, yes. It's not doing too hot. Okay, get ready. Prepare ye in the name of the Lord. Same trade, the 658s. Oracle, you suck. I didn't really think that was going to happen, but the whole market's kind of selling off. Okay. Nancy. Prepare the bathwater, baby. Okay, Jimmy's getting ready. As I watch the SPY, calls, scalping the lotto. Strike is 658. Three black crows. We'll see what kind of candle we get here on the next one. We don't want to rush into this. We definitely broke support, so this candle here is important. As Ruth would say. This girl named Ruth, she's on the Bible station. People call into her with problems, and so I kind of like listening to her. I mean, sometimes she talks a little funny. And I looked her up, and I said, God, she's old. I felt like calling her up and saying, well, I listened to you on the radio, and you sound a very attractive woman, but how old are you, 105? Honey, age, it doesn't matter. You can still fall in love. Bible verse, Jim 25. We have an inverted hammer with a tweezer bottom. Very tempting to go ahead and jump in these right now. They're at 82, 83 cents. Ladies, does age matter? It does to me. I couldn't pull Bill Clinton or Barack Obama. Age does matter. Or a Donald Trump. A lot of negativity going on here. Keeps dropping. So we got to find the next support. Let me go to the 5 minute. La 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 la. Sometimes the candles will change, you know, like 5 minute here. Let me see, 5 minute, 20 day, 5 minute, 20 day. There's a new support right there on the 20 day. 5 minute. Cancel. And that was 3 black crows. What am I looking at here? This don't make sense. Oh, a lot farther than that. Day 1 hour would be down here. It's 553. 78, 554. And then a yin yang right there at 551. 651, I mean. 655. Calm down. 653.78. And 651.73. $654. $653.78. We went below my supports on /ES. So I'm thinking about banning Bob. So if you're listening, Bob, I finally figured out what your little poem said in the room last time you entered in here, and I didn't like it. I don't need you disrespecting the room, that's for sure. Or any of our members. Bad news Bob, yep. He about pushed it. And I like the guy. Okay, we've created an orb on the SPX. I gotta see, you gotta say hello to my YouTube channel. I had a suggestion the other day to do something to it. I might do it. You know, I don't think this Jake tank fight should go on. There's no weight limit. That's one thing that I don't like about it. Jake will put on 200 pounds, he'll get up to 200 pounds or more. Just smash tank. Yeah, let's just be a little careful today. I think we need to break the 9 before we start. We're at the 9 right now here on SPX. The 6610s I gotta take off my shoes here. Trump facial manipulation. Oh yeah, Howard Schultz. There we go. The 6610s. See if we come back and touch the 9, and I'll jump in this baby. Dang, that's $100 right there. Okay. Yeah, there's definitely a this Schwab is about a second and a half slower than Tasty Trade, because when I thought about getting it there at 540, dadgummit, I can't keep, I got to use a different time. Pull up a Tasty Trade chart. See if that will help me out better. Might have to just go to Tasty Trade. I haven't traded with a Tasty Trade chart, so let me see. Okay, we're pulling back again. Oh, there we go. $4.40. Watch it here. Three black crows on a 5-minute. It's a tasty trade. Yeah, there's a big difference. $82.25. Now they're even. $82.60, $82.70, $82.59. Let me see, it's a 5-minute. $94. back to 440. Yeah, there's a time difference on these two. I think this one's more accurate. I need one closer to my trading platform, because that 1.5 second means everything. If I'm using my chart and I'm trading off a tasty trade. I gotta see what's on my phone. The girl that called me a narcissist want to borrow some more money. I ain't doing it. You ruined it. We're at 490. These are the 6610s at $4.40. We're at 530. So back to the top of the wick. What do you think? The hell was that? That was a coffee burp. Ladies and gentlemen, Washboard Jim will be taking some profit off the table. $6.40. Prepare ye in the name of the Lord. 660. Trade number 2 out of the way. For I am not a narcissist. I said, nobody's ever called me that before. I've been called worse, but not that. Livid Goose, would you write me a song about Jim being a narcissist? Sneaky snake strategy is so damn good that it made him into a narcissist. Y'all know you can't write a song like that. It begins your moral values. Nah, don't do it. Don't do it. Ladies and gentlemen, we're at $7 a contract from 440. We're at $7.20. Oracle needs to bounce. hike. It's warm in here. I can't believe how bad that got. Well, I think I'm just shit out of luck with Oracle. Damn, look at that thing go. $9.20? Are you kidding me? Three black crows with a tweezer bottom. I think I played that perfectly. On the pullback. But I didn't get out at the perfect spot. $9.20. Do you understand? That's 100%, 110% gain. For that reason, I'll have to take off my shoes because I'm hot. Go get my sandals on. Woke up this morning, put on my slippers, walked in the kitchen and died. Oh, what a feeling when my soul went to the ceiling. Up on heaven I did cry. Please don't bury me down in that coke. There's $10.40. This is getting ridiculous. I just left $1,000 on the table, or 800. Okay, it's all right. For you don't mean what you do. Look how beautiful that is. Yeah, this one's faster. Phone. $11.90. Shit. That's 1,000. $12.20. 30. Huh. Did anybody take the SPX? Can't believe Oracle did what it did. Moss is up. Watching SPX here. We're at the top of the first crow, which is the orb. NVIDIA getting up there. AMD 159.67. Meta's flagging out. Apple has flattened out at resistance. Bubba's at the 200 in the 1 minute. God, what's this? Netflix, okay. Cornware popped today. Cornware is trading higher on the company announced an expanded agreement with OpenAI valued up to $6.5 billion. This OpenAI is really getting some money in. Guy at the IRS says Tesla's coming out with a phone. It'll give you free internet, free Stargate, or whatever it is. The IRS has been working with ICE. Some of the employees have been going over to ICE. They're on deployment. I don't know if I should be saying that, but I did. SPX is at the 21 EMA on the 5-minute time frame. We break that, we're going to run up. Pullback will be the 9 on the 5-minute. So prepare ye in the name of the Lord. Randy, are you scared? Jesse's scared. You've been on a very bad losing streak. Well, let me fix that. I'm going to fix that. We don't want losing streaks. So if we break the 21, we're going to move higher. We're going to fix this right now. The 6610s. Well, the SPX just broke the 21. Will it run up to the 63? Got the 9 EMA towed at support. Then the stock will break out, you'll see. It's the one, it's the SPX. Break the 21 and run up to the 63. It's the SPX, it's the SPX, not the GMX.
We used to get notification emails when stuff got shipped out every week, and it stopped.
Did I hear something? I thought I heard something on the voice. Got 66.25 in my target. 66.25 today. These are the 66.30s or the 66.25s. I think we're going to go to $2,000 on the 66.10s. They're at 1670 now. get serious. And by the way, this is a Taylor. And I have a Martin. I have an F1. Man, that was a beautiful call. Snake, breakout, pull back, higher, low, boom. Let's see what RITM's at. Still have a few of them spies left. God, spies are at 179. We come close to hitting the 200 EMA here. So now I'm looking at the 66.25s or the 66.30s on the SPX. And we're going to see if we can hold the orb. If not, okay, get ready. Prepare ye in the name of the Lord. 420, Randy. Right now, we've got to hold this. Strike $4. Up strike is 66.30 at $4. Off the top of the orb, I'm going to type that in here. Well, Funky, if you're listening, I do appreciate you pointing out the orb to me. That helped me out quite a bit. I didn't know it was called the orb. I called it always something else, but you lost him? I'll give you the, I'll give it to you, the script here. These are at 470 now. You could take some profit off of it. It's a Head and Shoulders, a tight one. We hit the wick. We're at $4.60. We're in between. You got a little Head and Shoulders right here, and then you got another one right here. And wick hit that. So this time it could break out and do a double top. We're at 510 right now. We're up $110 a contract, Randy. You're at the Head and Shoulders. Make a business decision. Can we hit 66, 16, 41 today for a double top, or do we stop here at the shrug shoulder? I'm going to call it a shrug. We're at $5.10. You could make a business decision. For I am a narcissist. Let me see. I want to see something here. I don't even know how to spell it, but I'm going to try. Narci. Is it narciss? SSIT? A narcissist exhibits excessive self-admiration. I am beautiful. Profound sense of entitlement. I am definitely special. When I go shopping, I use the riding cart. I don't use the push. And a significant lack of empathy. Yeah, nobody is better than I. Often at the expense of others. Woo! That's me. What is a narcissist?
Xano's Jamaica sale is now on. For the best on.
Way before the first selfie, the ancient Greeks and Romans had a myth about someone a little too obsessed with his own image. In one
I am on YouTube every day showing my beautiful face. You can try to look like me, but you just ain't going to get there. It's going to take a lot of work. The 6630s are still at 460. We got a W right here. Double top breakout, so that could become support. Let's keep that in mind. If it does decide not to hold to 63, it can come back and hit the 50. And that's where I want to put that. Well, that's not what I want. I want to create an alert. I do wear the best of shirts. I won't wear anything but the best. And when it comes to cologne, you will never catch me wearing Brute. These are now at $5.20. I think we can double top. Here we go. The SPX Lotto at 6630s at $4 are now at $5.30, or they were. I mean, I think that's a pretty hard resistance. We got 3 white soldiers. Give me some money. What was that you called it yesterday, where I had to put on my YouTube channel so I can get money from you? I do collect 10%. Back darn 420. Well, heck. I'm gonna go in there and make me a salad here in a moment. And I think I'll fry an egg to put on my salad today. I need some protein. I'm debating on if I should have them scrambled. This is the third time we've come back and touched the 21. Resistance. Back to $5. Okay, we're at the top of the channel. This is number 4, 5. 1, 2, 3, 4, 5. 1 2 bits, 3 bits, 4 bits, 5 B. So I think it should break out here if it wants to. And it's 3 at the bottom. That I get out now. NVIDIA, new high. Apple's pulled back to a double bottom. And we had a triple bottom on Meta with a new high and a little pullback. SPX pulled back again. Oh, but we're gonna have lunch. Back to 450. 460. Oak. You know, I just wonder if that girl knew how much money I had in the bank, if she would have called me a narcissist. Especially when you're hitting rock bottom. Man, I got some kind of spamware on my Twitter. Every time I put a post, I get something like this. One follower. Most of them hardly have any, have none. I put this in the room. This morning, 3 black crows, a trade I call out daily. And then it says, Johnson knowing this analyst is worth watching. And I blocked this piece of shit. Person doesn't follow me. If you're talking about me, he doesn't follow me. So the SPY's been kind of hovering at support here for the last 5, 10, 15, 25 minutes, 30 minutes. 5, 10, 15, 25, 30. $658.30. Kind of a Darvis box. With a higher high by little. I haven't looked at Tesla today. You think I think they are bots? Probably. There it is, SPX. Been pretty stubborn here. We got a megaphone formed, kinda. I'm getting ready to go make my lunch. There's a spy retesting resistance. Are we gonna break out? This is the third time up. You know, if there was anybody I'd want to meet right now, it'd be Charlie Kirk's wife. Just to give her my blessings. Come on, do something. We're tired of waiting. This is the third trip to the top on the Spy. And it is now that time of the day, too, where scalping is over with. One more minute, less than a minute. I'm going to go cook me an egg, a couple eggs for my salad. I'm all choked up. Oh, I got the wrong cup. I got the empty one. Yeah, shit. I think we got to be careful. Well, that's the answer. No pullback. I mean pullback. No pullback. Huh. I got 6601.90 for a reversal on the SPX. So prepare ye in the name of the Lord. The 6630s. And if they dip cheap enough, I might grab the 20s. In fact, that might be a good idea if it does pull back and hit that, because they'll be down about $1 or $2, and I get 2 of those. That are 4 of the 30s, 4 or 5. You got 6604. That's a little bit higher than mine. Here we go. Get ready. Boom! Triggered! Triggered! 66. Triggered! Triggered! The 6620s times 2. Oh my. Got some in my throat. It could be risky. Let's go, baby. 3 black crows. Three black crows, and yes I am. We're now at 360. We're up $40. We're up $370. Up $50 a contract. Three black crows, yeah. Jim, is your eggs in the frying pan yet? No, but I do have the burner on. There'll be peace in the valley for me someday. There'll be peace in the valley for me. You're up. Jim, you're up $50 a contract. Have you ever thought about selling? No, I can't. You're up $100 a contract, $120 a contract. Have you ever thought about selling? No, I can't. You're up $5.10. Come on now. Have you ever thought about selling? Yes. That's $200 a contract. Oh my God. Woo! Out. Out. How in the hell? How does he do it? How does he do it? That's pretty good. Because he's a narcissist. That's how he does it. I'll be back. Got an announcement. I have an announcement. Today's salad will pertain tomatoes and olives and a scrambled egg. 2 of them. With a cheese cracker. I have no croutons. Damn it. And then after this coffee, I'll have a latte. I mean, after this coffee, after this salad. So today's salad partakes of cucumber, radish, carrot, romaine lettuce, stuffed olives, green with pepper, with garlic, feta cheese, ranch dressing, and a cheese chip. As I wait for the next trade, I think about that girl that called me a narcissist. To tell her how beautiful I am and how this salad, she'll never eat a salad like this. There's the salad with a cheese chip. Snake, break out, pull back. Did anybody take that trade with SPX with me? Man, that's a good salad. It really is. With that egg on there. Get ready. I see a doji right here. The tape is slowed down. People are thinking about it. That was a nice trade. This one's going to be better. 6620s, prepare ye in the name of the Lord. Same price. Same bet action. Snake, breakout, pull back, higher, low. Boom. One thing I've learned about trading, you only get so many opportunities before it finally fails. Double bottom. Wow, what happened there? Every once in a while it does that for some reason. $350, $360. Man, I'm biting my lip. $390, $4. Profit. Profit. Side note, nice trade. Woo! $4.20. I'm up $100 in contract. Have you ever thought about selling? Yes. But I can't. Because I want 460. $4.90. Damn it. $5. How does he do it? How in the hell does he do it? How's he do it? So today, as I eat my lunch, I made a grand. How does he do it? because he's a narcissist. There's only one as beautiful as me. Is that right, Randy? Don't you wish you had my looks? I'm so good looking that I have to go around town looking like this. I'm so good looking, and when I go around town, I have to look like this. Nobody recognizes me. They're at 6:20. It's the most wonderful time of the year. This keeps up, we just might break out today. This is really a good salad. All of them are good, but this one's spectacular. I will. For I command you. Break it. Livid Goose has reached level 18. So I think that will make him, I'm going to promote him to trusted friend. How long have you known me there, Livid Goose? Are you an early supporter? Since April of 2024, I think, well, I can't give you the, I'll think of another role here. Trusted is pretty good. I'm going to go ahead and give you the early supporter. You've been promoted twice now. It's not early enough, but I'll give it to you anyway. Because you're loyal. You're dedicated supporter. We broke out. We broke out. We are $9.10. Jim just made 300%. He's the most happiest guy in the world. We're at 970, 300%. My name is Leon Cooperman. I made 17% year to date on my stocks. I've had a real good year. My name's James Howard, the Washboardjim. I've made over 5,000% in a year. Leon Cooperman, 17%. Washboardjim, 5,000%. Who is this Leon Cooperman? There he is. American investor and hedge fund manager. He made 17% this year. Give me his 3.3 billion. I'll turn it into 300 billion in a year. This is the way he looks after he met me.
Has anything...
Have you ever heard of Washboardjim, retail trader? Yeah, I have. I heard he was an outstanding trader, and that I've taught him everything I know. In fact, I made 17% this year, and I hear that Washboard made 5,000%. He would have never done that without my expertise. That is because I'm a narcissist. Yeah, I could have fun with this for a long time, but it's going to get boring after a while. NVIDIA new highs. Now that I had lunch, I'm going to make my coffee. And then I'll get back to trading. I'm completely out of my SPX. That's true. Speaking of good songs, it's time for a good one. Trying to think of one that's perfect right now. There are some good ones, but I can't. Foghat. Trying to think of. I can't remember a lot of them that I used to love. Sammy Hagar. Phil Collins had some. I'm trying to think of that singer. Let's laid out a big old belch.
Progressive's Up-Payment Program provides down payment assistance for first-generation home buyers.
Oh, this is too long. 8 minutes. I can't do that. We'll do a little bit of it. That's the way you do it. Guitar on your MTV. Working. That's the way you do it. Money ain't for nothing and the chicks for free. He used the word faggot. Custom kitchen accessories. Yeah. Washboardjim will get back to trading now. He's had his break. NVIDIA new high. That ain't no lie. Oh yeah, I was going to show that guy about Tesla yesterday. The guy asked me where resistance was. Ooh, fart. Yes, ladies. Washboardjim just farted. I burped and I farted at the same time. Well, not at the same time, but after lunch. My salads are so good that they have to go out both ways. Go get my coffee. I haven't even checked out Titellini today.
The market, if we do that, you will see some buying activity taking place. But I think you probably will see some headwinds in next year, Diane, when you're looking at lumber prices. They usually have an inverse relationship or a really strong correlation between interest rates moving lower, lumber prices moving higher, a very big input component.
On the 5 minute, we're at the 50 and 63.
And concrete moving to the upside. But for now,
So that's going to be your resistance break.
The labor data, the initial claims, once again, coming in better than the street's expectations. If you're looking at the components, Texas, once again, kind of fixed some of those fraud claims and some of the flood claims that were kind of put in there about 2 weeks ago. You're starting to see that kind of correct itself. Also, if you
got a rising wedge.
In Virginia, you saw a massive revision or adjustment to the downside.
We're squeezing.
There, and this is exactly what happened last year, which I think is another reason why the Fed, some members, might be a little bit concerned that you do see actually a very decent spike to the upside when it comes to the amount of jobs added in September because of seasonal factors and other reasons as well. So that was actually very good. And then last but not least, GDP. If you're looking at those revisions to the upside, that's actually more than a one standard deviation move from what we have usually see for this print around now. Consumer spending actually definitely improved that number. But you do have a little bit of a concern about imports and things of that nature. So with better economic data, yields are moving higher, dollars moving higher, equities maybe trying to figure out what the Fed's going to do next. And I still think the October cut's still in question.
Okay, speaking of figuring things out, I think investors are trying to make heads or tails of the latest news with regard to Amazon. Shares moving a little bit higher right now, up 0.1% off the back of the news that they've reached this settlement. It's going to be a $2.5 billion settlement over those allegations that they misled Prime customers who were, saying it was just essentially the allegations where they made it difficult to cancel the Prime membership. Kev, let's start with your take on this one.
I think any time that you can define a loss or end the uncertainty around something like a legal battle, it's positive for the stock. Remember, $2.5 billion is the fine. Amazon's quarterly revenue was $167.7 billion in the quarter that ended in June. So this is a rounding error in terms of paying, money paid for them. They're going to change and make it easier to cancel Prime. Diane, remember we were joking about this yesterday. If they tell all these people that they can cancel Prime, how many are going to cancel Prime? Probably very few. So this is only bullish for this stock, and you've seen the stock turn around since its announcement came out. Remember, traders don't like uncertainty. Even if it's a $2.5 billion fine, they like certainty, Diane, and that's what you're getting here.
So yeah, so the certainty here is that they're going to have to pay this $1 billion penalty. Then they have to create this $1.5 billion fund to pay back consumers. That's part of the terms of this settlement that we're seeing from some of the reports on this. KG, what's your take on this one for Amazon?
Yeah, I agree with Kev. I mean, it's a defined risk now that they can be able to adjust, and maybe they just have another 1 or 2 days extension on a Prime Day to be able to cover the losses for this situation here. That could be one of the remedies. You talked about the split, the $1.5 billion. That's going to actually hit them. I would say materially, but you will see that adjustment in the next earnings announcement, most likely that they're going to write that down. But when you're also looking at the reimbursement for consumers, what will actually be very interesting, they're going to reimburse these consumers that had this complaint, but do some of those consumers actually come back into the fold here? Overall, it's not as big of an issue as we've seen in the past for, let's say, an Adobe, which is probably a lot worse to try to cancel your subscription with Adobe. I'm still having issues with that, which is a bigger matter here. I think it's a drop in the bucket. It's definitely risk-defined. I think you're seeing a little bit more headwinds for Amazon right now because of the consumer discretionary risk that you have when it comes to certain products and services that might be lightening up here when it comes to consumer demand, and then also potentially a lot of this movement that we've seen in artificial intelligence and when it comes to cloud and who's doing deals and who's not doing deals. And if you notice, Microsoft and Amazon don't seem like they're really announcing anything over the last couple of weeks here. So a little bit of a technical pullback. I think it's a nothing burger over the long term here. They're going to be able to compensate and get over the hump here and move forward to other items that are obviously a little bit more pressing when it comes to market cap.
That's a good point. I wonder if that money will indeed end up being circular in terms of the consumer payback, if they'll then re-sign up for Prime, especially when you think about, like, when you go to return something on Amazon, like, you're like, okay, this isn't what I wanted, submission, they're like, just keep it, we'll send you another one. So to your point, drop in the bucket, guys. All right, guys, let's talk Intel. Shares rallying right now, more than 6%.
Really?
It comes after initially it was a Bloomberg report about Intel pursuing Apple with regard to an investment. Kev, what's your take first?
I think this is Intel riding some positive waves here, trying to line up as many corporate partnerships or investors as they can. And, it was NVIDIA, it was the U.S. government, now it's Apple that they're looking for. And nothing is set. This is more just the beginning of a discussion. So, listen, I think it's good news for Intel. If people are interested, I think there's now momentum. If you have the U.S. government and NVIDIA as your partners, Apple or another company that might be looking at it going, this might be good company to be in. So I see more of these probably happening. Remember, Intel, it's a very much maligned company the last couple of years as AMD has taken away market share. But they're still a massive company with a big footprint in terms of chips and PCs. And so I think there's still, good news on the horizon. I think the momentum now for Intel is turning. Remember, that flow of news is starting to turn positive here for Intel, Diane.
Well, it definitely has been turning positive. I mean, it's, now you're just adding on to the big move it's had so far this year. KG, what's your take on these reports?
Yeah, nothing has changed from a technological standpoint that has attracted these buyers. I think if you're an NVIDIA, if you're an Apple, or others that have made commitments to this administration over the next couple of years to spend, what do you want to do? Do you want to spend the money yourself to be able to build out a fab or build out a factory or what have you, or do you want to invest it into another company in order to check that box off and have favorability with the administration? I think that's exactly what's happening here when it comes to this news, potentially with a deal between Apple and Intel. If you kind of think about it, Scott Besson earlier yesterday morning actually stated the NVIDIA deal with Intel just shows that NVIDIA is trying to invest in America. And so once again, NVIDIA is not building out anything here so much, right? They have some small deals, but they're looking at trying to deploy capital that might be easier to kind of get the administration off its back, maybe gain some favorability. Apple and Intel used to actually have a very big relationship. Intel messed that up because of quality assurance issues. Apple's now brought that into the fold here. Will they shell out a couple of dollars in order to pacify maybe some of the pressures? I think that might be the case, but just kind of note, Private markets seem to be a little bit tapped here when it comes to AI investment dollars. Now you're tapping some of these big, larger companies in order to have this circular ecosystem taking place. And now you have Oracle going to public debt markets in order to finance their business as well. I do believe that that's a little bit of a cautionary tone. It might not be tomorrow, it might not be next week, but over time, we have seen this type of situation in the past, and it has not ended well. It usually lends to over leveraging here. So that's my take on Intel. Nothing from a technology standpoint really screams that Apple really wants to do a deal here.
Okay, I'm glad you mentioned NVIDIA because obviously we've got to talk NVIDIA, and you're seeing a little bit of analyst activity around this today. Barclays out with a price target hike. They're raising their price target on NVIDIA to 240 from 200. They're keeping that overweight rating, so obviously still bullish on this. Shares moving a little bit higher. Kev, what's your take?
This is just the flow of positive news in NVIDIA continues, Diane. They think Barclays thinks $2 trillion in AI capacity, additional capacity by the end of the decade. I mean, the numbers just keep getting bigger and bigger and bigger. And I agree with Kevin. It's going to come to an end. We just don't know when, and we just don't know what from what price level. So right now, it looks like there's no end in sight. That's not true. There will be one. I just don't know when it is, Diane. And the numbers just keep getting bigger.
Okay, right, that's true, right? We don't know when the end is. KG, what's your take?
Nope.
Yeah, I mean, they're doing dealer financing now for others within this space. NVIDIA's job is to be able to sell hardware. That's all they care about. Even if the capacity gets too much at some point in time, all they need to do is be able to sell hardware off their books. They continue that type of strategy here, and they probably won't be the one holding the bag at the end. It most likely will be those that service the overcapacity or the demand needs for right now, the CoreWeaves of the world, the Oracles of the world that are building out these data centers, building out these cloud networks, and then at some point in time, we might not need that capacity. By that time, NVIDIA's already marked the revenue and already booked the profitability here. So I think they're in the right situation. And technically speaking, especially today, if you look at that buy the dip opportunity that did actually occur here, it's over yesterday's highs. We do have a decent little hammer candle. It seems like it's trying to consolidate and break higher. So the news flow is definitely in its favor as well, even though maybe some of the practices might not be sustainable long term for some of the other players in the space.
Okay, so we can't just talk winners, guys. CarMax, I mean, heavy pressure today, down almost 20%.
God.
And this makes me think of our conversation that we had.
They were
with Landon
pumping that yesterday.
He had a lot of insight about CarMax, especially as it across the competitive landscape. So it was almost like he had a crystal ball as to what was coming. So it wasn't just about the missing expectations. One of the things that stood out to me is the rising delinquencies here. So, that makes me a little bit worried about
rising delinquencies.
Kev, what's your take?
Yeah, they had a lot of numbers that were lower year over year, and like we discussed during yesterday's show, loan loss delinquencies are rising. And so the money that they are making, which the numbers are all down, is getting eaten up by loan loss provisions. So remember, a company like Carvana, they don't get into financing. The CarMax finances their own. It looks like they're starting to have problems with I think I reported yesterday, about a $16 billion loan portfolio. That will just continue the negative numbers. But here's the negative numbers. Weaker sales, higher loan loss, right? Sales down 6% year over year, unit sales down 4.1%, auto financing down 11.2%. All the numbers are lower. Again, this news stream on CarMax, Diane, all negative.
Yeah, I mean, the CEO said it was a challenging quarter, and that feels like an understatement when you look at, just the numbers across the board, and then the same-store sales coming in negative. I mean, the street was barely expecting anything. KG, what's your take?
Yeah, I mean, they're seeing some headwinds.
She called him KG.
That you're kind of seeing on these auto loans and these delinquency rates has been a problem over the last 2 years. They've been able to kind of pull that off at least as much as they possibly can. But you're now starting to see that pressure, at least for this company. They also noted that prices are going down for those cars as well. At some point, does that actually spark consumer demand as tariffs actually do impact new cars being brought to market? technically speaking, the hammer candle today actually looks pretty decent on a technical basis, and it is touching some pretty key lows here. It's touching the 2016 lows that it had back in January 2016, where it did see a pullback for several different months, and then the COVID lows, it's trading around those COVID lows as well, trading at around
She called him
10
KG.
12 forward multiple right now, actually fairly cheap compared to its historical
Kevin Green.
averages. I'm curious to see how some traders actually potentially step into this name. Maybe this was a kitchen sink type of quarter. Maybe they're going to be able to improve the latter half of this year and then going into Q1, Q2, calendar Q1 and Q2 of next year. This is one of those names that's hitting some key areas of support here, and some extreme levels too when you're looking at the COVID lows.
Yeah, I mean, they need to do something, especially because, we talked earlier about the bifurcated economy, and they're pointing out that mid to high FICO customers sitting on the sidelines, the CEO saying that, and, that where it's not down is actually those with lower FICO scores who he called out 550 and below. So, they're going to need to do something to kind of re-trigger demand there. All right, we'll put a pin in that conversation. Coming up, bull versus bear. The guys will get their example trades put together for Starbucks after the company announced a $1 billion restructuring plan. We'll have more Fast Market after this break.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper
They're
understanding.
now at $5.20.
technical analysis, options,
Something's happening.
Futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to
SPX 6620s. Can we hit the 200 or will we hit the orb? I don't know how he does it, but he's doing it again. Can you count to 3? Anybody in this room cannot count to 3, please private message me. Please private. Don't let everybody else know you can't. Just go ahead and give me a private message. And I'll teach you how to count to 3.
We're here for our convertible.
How about an SU?
Learning can be scary. scary, but it can also be incredibly fun. Today I want to teach you how to count to 3. When counting, it's nice to almost think of it as a fun song to sing along to. Let's begin with our first song now. Try to repeat after me. 1, 2, 3. Let's try that once more. You're doing wonderfully. Repeat after me. 1, 2, 3.
Count to 3. You can trade with me. We can do it. Okay. 1, 2, 3. No, I missed my entry. 360, 370. And now they're at 430, 440. Okay, here we go again. It just looks a little dangerous right now. See if I missed something here. Well, yeah, I think I'm going to wait for triple bottom. Okay, what time is it? 11:27. Jeez, some of these days. We will wait for 6,600. 5 more bucks. As we wait, I'm going to lay back on my bed for a bit. Just take a small little 10-minute nap.
Of next year, by the time of expiration, you have a break-even point of $101.45, an unlimited profit.
That's that alert.
Trying to sell that put credit spread, bringing in some credits here, and then financing the long haul, giving yourself some time, giving yourself some duration. And I just look at the monthly chart going back over the last 15 years. We are at the lower end of a potential wedge pattern here. Do you see a potential bounce? Maybe some buyers trying to step in, especially if this value trade or rotation trade does kind of take hold for the broader equity market. So this is actually bullish.
66.46.
Okay. All right, Kevin. I know you've got analysis over there at the SIBO on this one.
I'll be right back. Give me 10 minutes.
So what Kevin's doing here?
What Kevin's doing here?
Right, call for unlimited upside, and to finance that, he's selling a put vertical, something we do a lot on this show. Once you establish you're bullish, he's using one spread, in this case, a pretty big, 70-40 strike put vertical to finance the purchase of that long-term call. And you've got, a long time for this to move. So if this works over time, you'll have reduced the net debit down to just about $1.45, and you have an unlimited upside in Starbucks. The risk, obviously, is you're short a $30 put vertical if Starbucks were to break below 70. Right now, I don't know if it'll do that, but it is risk defined, but it's a pretty big boy put vertical that you're dealing with, an unlimited upside because you're long a call, Diane.
Okay, all right, there we go. I got to put on your big boy pants for this one. All right, good stuff, guys. Let's go get some pumpkin spice lattes in the break. Coming up, we've got cash tags. The team from Foley will be along with some sentiment data on the retail warehouse chain Costco. It's got earnings due after the bell today. Stay right here on Schwab Network. Fast Market will be right back.
Hi, I'm Alex.
I'm Jean. And I'm his mom.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Sam Vardis, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
Welcome back to Fast Market on the Schwab Network. I'm Diane King Hall alongside Kevin Hinks over there at the CBO. We've got you covered from exchange to exchange. Time now for our cash tag segment. For that, we want to bring in our next guest. We've got Landon Swan, co-founder of Likefolio. He's here with sentiment data on Costco. Costco's got earnings due after the bell today. The expectation is that revenue will top $86 billion. Adjusted EPS expected to come in at $5.81. But let's talk about your sentiment data. I did get a chance to look at this ahead of time. I was a little bit surprised. Landon, take us through your headlines here first.
Sure. So, I mean, you know, Costco is a great company. I'll just start off with that. I mean, it is one of the top companies in the country. I think it's one of our core conviction companies at Likefolio, so we believe strongly in it. That being said, you know, one of the tough things about reporting on them for us is they publish their numbers every month, and so our quarterly outlook is 2/3 cut, right? You know, two thirds of the quarterly outlook has already been released by Costco. But you know where it's at right now, the web visits are down about 2 points on a year-over-year basis, and it's kind of sliding a little bit. Interestingly enough, the sentiment is down. People are less happy with Costco for a strange reason. It's kind of the Yogi Berra quote. Nobody goes there anymore because it's too crowded. So that people are actually complaining about how crowded Costco is. So obviously that's good news for the company, but it's just interesting that it's leaking over into negative sentiment. You can see here though that down a little bit on a year-over-year basis. The bottom of the list, but I wouldn't put too much stock in that. And Target, Walmart, Target especially was coming off some lows, so this is a year-over-year comparison. That was easy to beat. Walmart's doing really well. I think Costco is just kind of hanging in there right now. And what we're seeing is it's just a very strong company with strong numbers. I mean, you look at their July sales that were up 8.5 points year-over-year. Their digital sales, which are only 8% of revenue, but it's up 15% on a year-over-year basis, so double what the company's doing overall. So digital's really pushing them forward. It's small but growing, and they're putting a lot of money and energy into technology. So they're looking to alleviate the crowding problem with scan-and-go checkouts, digital wallets, personalized online recommendations. All of these things are going to make more transactions and transactions happen more quickly, either online or in the store. So they're doing a lot of things right. It's just right now with the stock pulling back a little bit, sort of sideways. The data kind of supports that. It's not, it's not the sexiest of headlines, but we kind of agree with where the stock is at right now. Plus, again, the fact that they continually report these monthly numbers, we only have about 1/3 of the quarter to report on that hasn't been reported yet. So that's another reason why it just doesn't tend to move that much on quarterly reports, because of those numbers are already out.
And in food inflation, right? It causes stress. It has appeared to make shoppers trade down to lower retailers, and that has favored the discounters. Costco, Amazon, Walmart. You have Kroger and Target in your data. I don't know if it favors them as much as it favors the other discounters, but what do you think? Why do you think, when loyalty is such a big part of what Costco does, that there's, this stock, the last 12 months, Landon, not a great picture of their stock performance over the last 12 months. So this is a name that seems to be, now, I read 3 articles from 3 different analysts, and all of them, even where the stock is now, still talked about overall valuations being high. So what do you think it is that's making it? Is that part of it? You like the company, but you just don't want to buy the stock?
I think that's kind of the summation of it. Yeah, I mean, we think this is one of the best companies in the country, but you know, you look at the stock and it's not that appealing based on valuation, but you're right on loyalty. I mean, they have over 90% renewal on their memberships on a year-over-year basis, so people just don't quit. You know, they've increased their memberships by 10% year over year. They're kicking in like $1.2 billion a quarter on those fees. You know, their traffic is up 5.5%. Their ticket size isn't up much, but again, that kind of reflects, like you're talking about, you know, everyone's trying to save more money. They're trying to get the deals. And so Costco, you go buy in bulk, you get great deals. And I think people just really enjoy belonging to this price club, basically, where you have to pay a little bit, but then you go and you reap the rewards. And not to mention their private label, Kirkland. I mean, that's doing really well. It's also got some good tariff insulation there. So they have the ability to pivot and maneuver as needed. But it's a great place for consumers to save money, and that's how people see it. It's just a question of where's the, you know, is the valuation priced correctly? What kind of growth are we seeing? We're not seeing a ton of growth in the company, even though, you know, their numbers are coming in strong. It's just on a year-over-year basis, people are not more and more enthusiastic because the bar is so high. They're very enthusiastic about Costco. So to get that to go to that next level, you really got to get out there and go high. So it's tough to beat what's already a high watermark for Costco on all of our year-over-year metrics. That's why they're negative too. It's not because they're struggling. It's because it was really high before, especially when you compare these numbers across to you know, like a Target or a Walmart. Costco's doing really well, but the stock, again, I'm sure it's been frustrating for investors because, you know, from 860 up to 1080, now it's 940 or so. It's just kind of going sideways, as you guys showed. So, you know, as enthusiastic as consumers are about shopping there, investors are about the opposite, about buying the stock.
I will say for a while I didn't get the hype around Costco. Not that I thought it was a bad place, I wasn't a member until this past year. And the first time I walked into one of those warehouses, I was overwhelmed. I got it because, honestly, I joined because of gas. But I see the allure there. However, I will say I noticed that Walmart's prices tend to be cheaper, but I like the produce better at Costco. So it's a, you know, it's a dance, right? But I think my question is going to the price that you're talking about around shares. And I don't know if you have any insight on this, Landon. I mean, they haven't done a split in years. And, you know, you wonder if the part of it is just how expensive shares are, especially, say, compared to Walmart, because Walmart has outperformed Costco year to date. I mean, Walmart's up double digits year to date. And it seems like the demand is still there for Costco. So what's your thought on that as it relates to just the, you know, a little bit more on the share price and the impact that maybe that's also holding investors back?
Yeah, I think for the retail investors, that could definitely be a factor. I mean, a $93 stock is more fun or exciting to buy than a $930 stock, even if you get, you know, 10 times as many or 1/10, depending on which way you're talking about. So, yeah, I think that could probably be a good move for them. Obviously, you know, when it comes to the big boys, the quant funds, hedge funds, they don't care, and they're investing their money where they want. But for the retail investor, absolutely, it's definitely more attractive to get that lower price. But I think they also want to see some kind of momentum in the stock and the way that it's been trading, and you just don't have that. It's been a lot of chop, a lot of sideways, and it's just not doing much, despite the fact that probably everyone or close to everyone who owns Costco stock goes there and they see the place completely crowded. They know that when they walk in, they have a plan of spending $300 and they accidentally walk out and spend $700 and they got a new TV. Like, it's just incredible what Costco does to people on the way in versus on the way out. So it's got to be frustrating for investors. I would just tell them.
It is for me, honey. $3.10. It's not as low as I want, but it's going to be good enough. 310, 360. Come on, give it to me. There you go. $370. For I'm Washboardjim, the proudest day trader in the world. I'm as arrogant as a... Let me see here. $50 a contract. Thank you very much. I waited and I waited. I took a nap. I don't know how he does it, but he gets it done. $4. Yeah, I'm all out. $3.60 and $4 to the orb. $4.50. Okay. For I'm a rambling man, I ramble around all over town. Ramble round, around, around and around. Get ready, prepare ye in the name of the Lord. If you can count to 3, you can trade with me. I'm on a roll today. I don't know how he does it. He does it every frickin' time. How does he do it? Do we have a two-headed snake? Oh, yes. For I'm a rambling man, rambling around all over town. Ramble around. Here we go. Get ready. Prepare ye in the name of the Lord. $2.90. $2.95. With a 1, 2, 3. We'll see how bad this thing is. If you can count to 3, you can trade with me. If you can count to 4, you just might make a little bit more. One of them, 2 bits, freebie. We're now at $3.20. I don't know how he does it, but he makes it look so easy. That's a huge wall above us, too. Come on now. Don't. $2.75, $2.70. It might come down and hit that 6.46. We just now broke support. Not yet. Barely. Just for being you, Nancy. I was going to add right there, but I didn't let me. 245, 240. That's Nancy Pelosi song. Jim's going to sit on your face. Retail traders are going to too. We're back to 285. So, I didn't get my dip. We just got to break out. Come on, James. We know you can do it. SPX, I got in the trade, thought I had it made. It's a falling wedge, let's have a breakout. I'm playing my ukulele like I did when I lived in Hawaii. Playing the SPX. Guess where I am here. Watch my trade. We are at 310. I'm up $20 to win. Back to even, I was down. I could hear a sweet sound, but I want this to break the 63. I'm playing my ukulele that I got in Hawaii. Listen to the seashore. Honolulu ain't too bad. I never felt that sad. Let's break out of this fallen wedge. as you can see, it's been through a few concerts. Tune that thing up. That's good. I got her tuned up. It wasn't that bad out of tune. Just the G chord. And C. Come on, damn it, break out. I don't think it wants to too much. I don't think we're going to have a move here. I'm going to give this another shot. I'm still in at 290. $230. Oop. We're about to my support line. Come on. I want in this thing. I'm going for it. I'm trying to cover my ass here. 215. I got 290 and 215. Average 240. That gives me 6. Ringa says it sounds nice. Let's break out. Break out. Okay. I have an average of 240. We're now at 265, 275. Today's ukulele lesson will be brought to you by Washboardjim. This will be the $3.10, $3.20. I don't know how he does it, but he did it. I'm out. Anybody take the trade with Bobo? Question was asked, Livid Goose, after you cut me down, say you're sorry. It's all in love, Livid Goose says. Love. Love. It's all in love. I was told that I was a narcissist. I had to look it up. Then when I read the definition, I stuck my chin up. There ain't nobody as pretty as me. There ain't nobody that can trade like me. My middle name is Narcissist. Washboardjim. Just learn and see. I got in on 1, 2, 3, and it go down. There's only one narcissist, and that's me in this scrawny little town. I had to look it up. I said, what the heck's a narcissist? Because I gave you a lot of money? So that was, let me repeat. $2.40 minus $3.20 is what? $80 a contract times 6. I took that to the 50 and to the 3 and the 200. I mean the 63. Next, I'll be pulling out the banjo. I gave 2 banjos away. Here in the past 5 years. Okay, well, I have to say that was kind of a, I was down there. Ringa says I'm getting good. Good at what? My arrogance? It's because I'm a narcissist, Ringa. Woo! I make the best coffee in this town. The video's pulled back to the 200 here. It's now 12:14. God, I still got 3 hours of this. I need to walk around the building once. Alex Coffee is on television.
It's super expensive on evaluation for what the company is. But you look at the sticky...
Alex, would you like to come over and have some magnificent coffee, Mr. Coffee?
Why the market likes it, but you are paying up for earnings growth that does seem to be decelerating.
That is true, and I think it was probably due to catch up with Costco. We were, seeing just such consistency that it felt like there was this coming, a period of perhaps more consolidation, just more choppiness around these current levels. But right now, there's been nothing but bullish activity from the sell side going into this report. So I know we've pulled back, but hey, always an opportunity when looking at Costco, and their earnings aren't necessarily typically the most volatile type events, considering we get those monthly sales on, again, a monthly basis. So we'll leave it there for the top of our show today. But coming up next, time to discuss two names that have been major outperformers this year, but are seeing some weakness today. Oklo is down 10.6%, while still up roughly 396% this year. GE Vernova is another one, up 85% this year, pulling back today by about 3%.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab. Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl?
Schwab. Schwab, a modern approach to wealth management.
Whether you're a bull or bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Welcome back to Next Gen Investing. It's now time to dive into the technicals on two names in the alternative energy space, those being Oklo as well as GE Vernova. So joining us to discuss more on some key levels to watch is Rick Ducat, our chart master. And Rick, I've kind of thought of these names as like the old school versus new school, although to GE's credit, they have been a stellar performer this year. They also do have exposure to alternative energy, so that they feel somewhat, but Oklo, a different beast, and you can see that really from the crazy momentum to the upside as of late.
Yes, but quite an interruption to that momentum as well. It can be quite a vigorous reaction when something does happen that can potentially break this trend here. So as we can see, for the most part, price was trending upward in a channel type shape here between our two blue dashed lines here. A significant high point was the 85 level, and then the 96 level, we saw big pushes after we did breach those points. Now we saw a bearish engulfing candle yesterday. Our larger red candle completely swallowed up the previous day's smaller green candle, referring to the real body. The distance from the open to the close is how you look at it typically here. And then today we did get further downside follow through. Now price has managed to recover. We are just about at this shorter term white trend line here, quite a steep trend line here, but we have managed to recover above that point. So if we were to consider our other studies, RSI and moving averages here, we can see that Our RSI, our momentum indicator here, crossed below its threshold of 70, so more of a bearish signal there, no longer overbought with a broken trend line. Still, the momentum's fairly high, though, toward the bullish side. We can also see that price is quite close to our 9-period exponential moving average, right near 117. It's in confluence with our trend line, so that could be an important supportive area to consider going forward.
Okay, so when it comes to Oklo, this is, I mean, kind of either a technical dream or nightmare. I'm not really sure which one, because as you said, I mean, we've been in this really, substantial obviously uptick, but then today, I mean, we're taking it on the chin, not really on any major news, down 11.4%. So this is the risk of, being exposed to a name that has climbed to the extent as Oklo has, even over the course of just the last week, it gained 63%. So what else do you watch for here when looking at different technical indicators to gauge, what on earth happens next?
Well, as you say, the difference between a dream and a nightmare in trading depends on your perspective and your positioning here. So the volatility can cut both ways here. So now our job is kind of to assess where we can find further support if things continue to deteriorate here.
Right down there, exactly.
+1 standard deviation channel. We have our blue solid line here, our linear regression line.
Where's my deviation chart?
So
I thought I put one up here.
Fair value. One standard deviation to the upside comes in just above that 100 101 level or so. That also coincides with our yellow 21-day exponential moving average. Pretty close to those old highs as well. So between 96 to 100 could be a supportive area going forward here. To the upside, our +2 channel, 128.73. That could be a resistance area.
Mine's higher than his.
Deviation channels. They're a snapshot of this point in time. It'll be a moving target going forward.
It'd be the first standard deviation.
Right now.
Okay, yeah, and only seeing some of that pressure pick up and watching the price move in real time as we are just drifting to the downside. So all of that to be said now, as we do look at Oklo, for example, purposes here, where do you even begin when looking at a name as volatile as Oklo's been?
I love that you set it up that way, because I'm using this as an illustration, almost educational, that everything is relative. And in the case of Oklo,
everything is relative.
But the same strategies we talk about, range bound, bullish, bearish, all can still apply, just relative to that stock's volatility. So this is a neutral strategy. It's selling an iron condor, and that sounds crazy, right? Range bound for a stock that's moving 10, 11% on a daily basis. But the market's aware that this stock moves that much, and you can go very, very wide. You can
I was right about shorting this sucker the other day.
Below the current share price, sell a put vertical, and go above the
I was right big time.
Sell a call vertical and still collect a quarter of the width of the strikes. And so that's what we've done with this example going out to the October monthlies, which is just a couple weeks away. And so with this particular strategy, it's the 90-85 put vertical and the 160-165 call vertical. It's risk defined, most importantly, because if you are range bound or looking for range bound with a stock that can move 11, 12, 20% in a day, maybe you should know what those worst case scenarios look like as well. And it gives you that idea and staying power in the event that these are breached and it could come back into that range. But break evens, if you collect $1.25, would be 88.75 to the downside, 161.25 to the upside, max profit potential of 125 on max loss potential of 375. So 3-to-1 on that, Jenny. Range bound, that might sound crazy for a stock that moves this much, but it's all relative, and you can see, your break evens, you almost double it to get to the upside break even, which is just really illustrates just how big of a range this is, $80 high to low.
Yeah, and I think gives you that wiggle room with that flexibility. We also have a bit of duration when looking at this example trade, so you have some wiggle room to see things hopefully maybe ease off today's pressure, or obviously just moderate, although moderating is not a word I would typically associate with Oklo. But our next name is a bit more stable. GE Vernova, of course, who spun off of the massive GE conglomerate. It's been, the greatest story to watch this company emerge as its own real stronghold over the overall energy market. So all that to be said, we are lower today by about 3.6%, which is a pretty big move for this company. What have we seen here from another name that's been, a really nice performer this year?
Yes, certainly. The spinoff certainly seems to have helped. It was kind of this lumbering giant before that's been, split into these different sections now here. So we can see
standard deviation channels are great for looking for a new resistance or finding a new support. This has two deviations on it instead of just one. Some call it a linear channel. But you can see we had resistance line here to that first standard deviation. This is on Oklo. And the other day I said this would be a great short. Because, I mean, that run is really, too much. The only reason it run like that, and it's not making profit, is because it's a low float stock. So they get very volatile. There's Leon Peterman. And the way I go to FinViz to look for my floats. And this is 105 million. I thought it was lower than that. I really did. That's still a low float, but not in the 1 to 25 million is a low float. 25 million, the volatility is not as deep as it is if it's a 2 million or a 1 million float. But that's 105. I thought it was lower. Ah, darn it, did I miss something here? Oh, yes. Oh. Oh, yeah. Missed it. I don't know if I would have took that there. Probably not. I would have waited for this right here. Let me see. I know I wouldn't have took it probably. So I'd have waited for that right there. 50, 65, 90. Now if we hit that, I would have took it. And we didn't hit it. And run it back up to that resistance line. If I was watching it, I might have. Because of the candles behind it. I might have took that. If I had patience to wait, I would have. spy. We got a spinning top and inverted hammer with a tweezer bottom. 3 black crows, actually 5. Europeans privately tell Russia they're ready to shoot down jets. God. Really? Can we ever have peace anymore? You know what I'm saying? It's not that hard. For their name is Washboardjim. European privately tell Russians they're ready to shoot down jets. Oh. U.S. fighter jets reportedly intercept Russian warplanes detected over Alaska's airspace. Come on, Russia. You're pushing this. You're pushing it. We need a market correction that could do it. Okay, we've got a snake breakout double bottom, yay, high or low. Well, my success rating has been 100% today. We're now at my support. That's the next one until we drop down, because we already broke that one. Let me see the options here. Could go small. Run them up to the 6600s at $4.40, and I missed it. It didn't. I'll let this news settle. We're at a yin yang. It's 6600s. Well, I waited for 65, 90, 77. We just landed at that support. Should I take the trade? Or should I wait? If I jumped in at 450, could have got out at 550. Just a minute and a half later, I'd be $100 richer. Why didn't I take that trade and run it to the sky? It's a yin yang. It's a term I made up trading. It's when support hits an old resistance. So I didn't take it. Resistance, and I waited. Support, and I had a chance to jump in at 450, and it run to 560 in 2 candles. It could drop more, so I'm just going to be patient here. The thawing wedge. 65.85 really looks nice. It's 12.40 right now. We didn't hold support, but we got a new wedge right there. Got a new wedge here. And we just squeezed out of it. Darn. Things are expensive. 430. These are the 6600s. $4. Can it drop more, or can it hold this wedge support? That's the question you got to ask right now. I just feel like waiting. But we're at the spot right now where it pulled back after it broke out of this wedge. $380. I wait. I really don't want to push my luck right now. You know, I've known traders to take 50, 60 trades a day just on a one candle bounce. And that's too much work for my accountant. Imagine what it costs to have an average of 30 to 40 trades a day. I always found it kind of hard to believe, but they said they did it. You know, my average about 5 to 7, 10 to 12 on a good day. The day goes by forever. I want to see if this thing dips on down to either one to in here. We could break out. I mean, we're out of the wedge. It has possibility of breaking out right now. If I want to buy one contract, I'd buy one only, knowing that I'd lose probably a couple $100. Should I? Are you asking for advice, James? I would, I'd say go ahead and do it. Jump in it and see what happens. Buy 5 contracts. But I'm scared. I don't want to do that. I want to wait for it to come down more. I dare you. I dare you. Go ahead and jump in, Jimmy. We'll see what happens. Do it. I dare you. I double dare you. No. The big bad bear ain't gonna let me do it. I ain't gonna do it. I'm gonna wait. What are you, chicken shit? Jump in the trade. No, I can't. I won't. Now we are at a support. We're at support number 1, which is on top of the wedge.
cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on SchwabNetwork.com. Morning Movers, be the...
By 5 contracts. But I'm scared. I don't want to do that. I want to wait for it to come down more. I dare you. I dare you. Go ahead and jump in, Jimmy. We'll see what happens. Do it. I dare you. I double dare you. No. The big bad bear ain't gonna let me do it. I ain't gonna do it. I'm gonna wait.
Google will help provide some of the support for the project refinancing, or excuse me, project financing in return for warrants equal to about 5.4% of Cipher's equity, or about 24 million shares.
Jeff, when you look at the performance and you try to make some sense of it, was this a case of, hey, optimism around the backstop and then concerns around dilution immediately after you get the news about the senior notes offering, or why do you see the stock seemingly moving so
Why are you such a whiner?
Well, the stock has had incredible swings related not just to their push into the AI side of, you know, this kind of computing power, but also, you know, what we've seen out of crypto in general has been, you know, moving the stock. So I think the reaction to this is that maybe we're selling the news a little bit, but to your point, we saw those senior note offerings for about 800 million. You know, investors might be looking at that as well, and you know, have some concerns. We've seen earnings over the past few years. If we look back at Q2, you know, they're still reporting a net loss, although on an adjusted basis, they did come in better than expected. So I think investors are probably taking a little bit of a little bit of time here to sell off and take some profits. That's what we're seeing.
Okay, and so today's move has been, monstrous. We saw some substantial selling that has eased a bit, but so as far as, looking at the 17% contraction today, is this just really, tied to overall pessimism in the market, or are we seeing any degree of specificity driving some of the weakness today?
Yeah, I'm not seeing anything specific out of certainly the offering, for the senior notes. That's something that we will see investors sell off from sometimes. Although, there has been other news that this might be kind of a mounting pressure here. If we look at, more recent events, V3 Holdings, one of their largest stakeholders, disclosed about a 2.7 million
taking its sweet time.
Sale worth about $33 billion.
I really want it to come down, but we'll see.
Moved higher that day. That was partially probably along with some good news around their hash rate growth.
CIFR's up 500% from April lows. CIFR.
To sell off today that are a bit more specific to Cipher.
Real quick, Jeff, 30 seconds or
Never
less,
heard of it.
which I'm sure you can do. Is this still really correlated to crypto? I mean, Bitcoin's under pressure today, or some of this data center stuff augmented a little bit?
Yeah, it certainly is. I mean, think about it from basically two businesses for this company. The self-mining of Bitcoin, they operate these large data centers for mining. They collect revenue from that mining. That's very sensitive to Bitcoin prices and to their efficiency. Now they've got this high-powered computing where they're leasing this computing capacity to customers. That really takes them away from relying just on crypto and allows some of that recurring revenue.
God.
So they are, establishing things outside of crypto, but they're still sensitive to that.
Yeah, and I think a good place to leave it and good point there is we're down about 18% nearly on the session, but appreciate it, Jeff Pierce, for that help today on Cipher Mining. And that'll do it for us for Next Gen Investing for this Thursday. Coming up next,
Amazon new low. Amazon new low. Yeah, it looks good on the daily if it stays above 10.
Schwab Bank Investor Checking. The checking
If not, it's going to drop down to 8 to $9 bucks.
JD Power for 7 years in a row with investor checking,
or even lower. Actually, it's a good spot right here, but this
cash management
$9.69.
all designed for investors like you with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking at
750, 969, and then this number right here.
It's as easy. Cash moved to your brokerage
1068.
account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, mutual funds, and more.
Prepare ye.
With Schwab Bank Investor Checking, the checking account built for investors.
Can I have silence, please? See what would have happened, James, if you jumped in the trade? I tried to trap you. I know. That's why I waited. I wasn't ready to take the trade yet. I see it's getting close to your channel of support. What's your plan of action here? Well, let me look. I'm still looking at the 6600s. The 6590s, if I buy one contract at the Three Black Whores, prepare ye in the name of the Lord. $4.20. Bears are still in control. I see the big bad bear. Almost got you in a trap. But Washboardjim had better sense than that. I'm now hitting my channel of support. Might take the trade. We're at the low support of the orb. And I got it made. I'm the sneaky snake trader. Called it 390. The 390. There it is. I'm about one. Now don't, this is risky because we're not at my bottom support yet. Oh, there it goes, right there. Now we're there. I'm gonna add one more. If I can get it here at 350. If not, I'd just leave it alone. Jimmy was right again. Right there. Now I need to hold. Shit. Okay. 350 and 390. Now we're at 320. Nancy, grab me a bottle of Tylenol and a shot of vodka. No, I'm not pregnant. Come on. Yeah, I think this is... This could be the losing trade for me. We got to hold this here. I wanted to hold that one. It didn't work. They have to buy 4 at 275, and I really don't want to throw that kind of money in this. We'll just wait. I'm down 200.
So talk to us about this group of catalysts that you see for the raging bull market.
So
You're down 95%. Have you ever considered selling?
No, I can't. That's no.
I'm even.
You're down 95%. Have you ever considered selling?
No, I can't. That's no.
You're down 95%. Have you ever considered selling?
No, I can't. That's no.
Jim, you're about even. Did you ever consider selling it? Yes, I did. But I didn't. You were even, Jim. You were up $20. Did you consider selling? No. No, I did not. I can't. I got to stick this one out. Do you regret not buying the dip? Yeah, I did. I would have bought 4 contracts at 275. And I would have definitely got out at 370. My average on my first 2 trades. And I'd have been up $400. Jim, have you ever picked your nose on a date? I did once. Jim, is it true that you bring ass wipes with you on your first date? I take the Fifth Amendment. Jim, is it true that you kissed Vera Allen on a dare? The ugliest girl in high school? I said, it's true. I did kiss her. Right on the lips. Breakout. For God's sakes. You're up $20 $20 on your 2 contracts. Have you ever thought about selling? No, I can't. You're up 40 now. If I break the 21, I'll be up more than 100. then I'll think about selling. We're at the 21 right now. We're squeezing between the 9 and the 21. This is getting serious. We're up $80. Have you ever thought about selling? I should have. Does anybody want to give me a grade today on being the best monitor out there? Johnny Ringo? You want to step to the plate? You're up, Jim. $160. Have you ever thought about selling? No, I can't. I gotta wait. You're up $200. Have you ever thought about selling? Yes, 520. Yeah, I'm out. Woo! Jim, were you worried about the trade? Yes, I was. Johnny Ringo gives me an A+. Sheba? Very good. I stuck with it. I stuck it out. That ain't no doubt. Did anybody take that trade with Bobo? I'm 100% today. That was a toughie. Even the big bad bear tried to get me in the trade way too early. And I said, no, I ain't gonna do it. So let's see why I got out of that trade right here. You see this here resistance line? It was a support. And I said, no, I'm going to wait for it to fall down into this channel. Look where we stopped. Patience paid off in that trade. I mean, I jumped in early, but still patience paid off in this trade. Because if I'd have done what the big bad bear told me, I would have jumped in this trade up here and called it a head and shoulders. But I looked at the time. It's 2 o'clock Eastern. That's not the best time to be in a trade. You've seen me get stuck many a times by doing it. So I'm learning to not be as bullish during that period and be more hesitant. Especially when you're at all-time highs and the market's in a downtrend anyway. And you're hearing it from there's 670, 690. I mean, look at that, 370 to 690. That's $600 with 2 contracts. $740 investment. And I'd have made 90%.
You're down 95%. Have you ever considered selling?
No, I can't. That's no.
$7. Jeez. I'm proud of that trade. I really am. I think I'm so happy I'm gonna go make me another coffee. And I got an info commercial I'm gonna be putting on here in a second. Oh, God. Yeah, sure. Huh. $7.90. I'm really proud of that trade for waiting and waiting and waiting. 840. Good job, Jesse. Mike gives me a B. Mike. For getting out too early. Okay. Today's info commercial. So I went out and I bought me some LMNTs. And I've drunk three mornings in a row I've had a glass of this. 100 milligrams of sodium, 200 milligrams of potassium, and 60 milligrams of magnesium. And I got 3 different flavors. So I'm giving these a shot. They're supposed to help your electrolytes, support your clarity and concentration. Gives you more energy, less brain fog or cramps. It's supposed to hydrate me. So I'm giving them a shot. No sugar, no caffeine. It looks like it is going to go back to 6,000. Yeah, I got out. I sold. I sold too early. They're at 9:30 now. Oh, yeah. I'll be going into the kitchen. These things are $9.90 fucking cents. $10.30. Oh my God. $1,400. 2 contracts. Oh. Unbelievable. I mean, that's so, I was proud of taking that, but God, now I'm not so proud. I'm possessed by the bear. Come. About the dip and the bear was on my back. It was nothing but a big old hack. My average was at 370. I could have sold them at 1100, made 1400 in that trade. Had it made, but time after time, gotta play this ukulele to unwind. I just want to quit. Jim, you're up 30%. Why did you sell? I did. Jim, you would have been up 200%. 300, I mean. Why did you sell? Well, don't know what to say. I was up $300. I thought it was the best thing to do. But you could have been up 1,400. It's 11:20 again. It's teasing me. Oh, so 11:30 minus. Let me see. 11:30 minus 5.20 equals 610 times 2 is 620, 1220. I left $1,200 on the table. I guarantee you I'd be worth at least 10 million in the past 3-4 years. Most of my trading period life, probably. And buy its support. I'm gonna go make my coffee. I got the perfect country song right now. I'm gonna play it.
Thales is a global leader in cybersecurity, securing what matters most.
There's a tear in my beer, 'cause I'm crying for you, dear. You are on my lonely mind. Into these last few beers, I have shed a million tears. You are on my lonely mind. I'm gonna keep drinking until I'm petrified. And maybe these tears will leave my eyes. There's a tear in my beer, 'cause I'm crying for you, dear. You are on my lonely mind. Last night I walked the floor, and the night before, you were on my lonely mind. It seems my life is through, and I'm so doggone blue. You are on my lonely mind. I'm gonna keep drinking till I can't move a toe, and then maybe my heart won't hurt me so. There's a tear in my beer, 'cause I'm crying for you, dear. You are on my lonely mind. Lord, I've tried and I've tried, but my tears I can't hide. You are on my lonely mind. All these blues that I've found have really got me down. You are on my lonely mind. I'm gonna keep drinking till I can't even think. 'Cause in the last week I ain't slept a wink. There's a tear in my beer, 'cause I'm crying for you, dear. You are on my lonely mind.
New AI features.
Slash ES hit the 63 on the 1 minute, or on the 3 minute. I got 3 minute on that? Why did I got the 3 minute on there? It don't matter, it's the VWAP. Huh. I'll just leave it there because I kind of like how it hit that 63. Well, let me go to the 5 and see what the 5 says. Five looks better, resistance-wise. One minute right now would keep me in the trade. 3 minute I'd have got out. But the one minute I'd still be in the trade. Well, maybe not. I could have probably sold it right here. Yeah, I could have probably sold it. Hit that shoulder line. You see it acted like resistance right there, and it was support right here. I would have might have waited. Oh. I'll be right back and go out to the trash. Boom. God. Man, 1,800. That'd been $3,000. I'm gonna go put a load of laundry in. That's a pretty good rebound. It's embarrassing in a way, but I'm embarrassed. I mean, don't know what to say, really. I want to cry. I mean, I've been real good today. Patient and everything. Exits were been marvelous, all but this last one. 100% on the entry, but jeez. $3,000 on two contracts for $370. I could have held him. The hard part about trading is the psychological part of it. I'm just I'm just so thankful that I don't dream about this stuff. I've never had one dream about stocks. Never. And I dream every night. I never have dreams about spending money. I'm gonna go run down to the laundromat. It's just right in the building here. I'll be right back.
We'll be right back.
We'll be right back.
The final 90 minutes of the
trading day, that's when markets make headlines and traders make decisions.
From earnings shocks to sector rotations, we're tracking the catalysts that move markets right into the close.
Here on the floor, I bring you real-time sentiment from traders driving the action.
And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings.
Live coverage of the close every single day.
This is
Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Sam Vardis, live from the New York Stock Exchange. When the market moves, we're on it, getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Welcome back to the watch list. For a look across the housing sector, I want to bring in our panel. We've got Brian Bernard, Director of Industrials, Morningstar, and Francis Stacy, Economic Strategist, Scarlet Oak Financial. Guys, thank you so much for joining us today. Francis, I'll start with you. KB Home put out its latest results. It did do better than expected in its most recent quarter, but at the same time, they lowered their full-year sales outlook. The industry has been dealing with a tough housing market. It does start to feel like as we have conversations, there is some light at the end of the tunnel. Francis, what's your thought?
Well, it's a victim of its sector. When you look at the economy in aggregate, you've got all-time highs in the stock market, you've got huge valuations, you've got an all-time high in liquidity of the system. But the problem is that usually home prices trade inverse to rates. And the problem is that rates have been really high, but actually costs have gone up because of inflation. So housing is just not very affordable. We're living in a bifurcated economy where 60+% of people are living paycheck to paycheck and relying on credit cards to pay for, expensive groceries. And the affordability factor is just absolutely huge. And so KB performed well within the sector given that backdrop.
That's a good point. And look, I talked to another analyst who said KB gives you insight, especially into the first-time home buyer and the trends there. Brian, what's your take?
Well, I mean, the first-time home buyer is what is under pressure here with these rates. But I would say, look, I mean, the home builders are doing better than you might expect. I mean, the incentives, which are elevated. I mean, Lennar is being quite aggressive with that, but that is still working. I mean, new home sales are holding up. So, I think things are tough in the housing market, but home builders are still holding their own. And look, if you look at gross margins, they're coming under pressure, right? But if you look at the group of the 18 traditional public home builders out there, those gross margins are still better than they were before the pandemic. So I think you're going to continue to see that this year into next year. I think next year you're going to still be a challenging environment for the housing market and the home builders.
And Francis, let me go back to you about that point, especially about the bifurcated economy, because look, the National Association of Realtors put out their data today, and existing home sales was essentially little change, right? So we're seeing different signals. Yesterday, new home sales really strong, up more than 20%. There was a standout in existing home sales, and we talked to the chief economist, Lawrence Yun, earlier today. Sales of homes priced above $1 million, that did increase 8% year over year. Do you expect to continue to see those trends through 2026, or could we see some catch up on lower price homes?
Well, it just all depends on rates, because rates is so huge when it comes to the affordability issue. When you have the lower end of the economy, they are dependent upon mortgages and can't pay cash. Notably, though, housing starts was down 6% year over year, and single family particularly down 12% in the month of August. So, these are kind of this tough juxtaposition between this bifurcated economy. But I do think that if rates continue lower, we can avoid a recession. We don't have any major holes in the labor market. I do think that the housing picture is going to continue to improve. However, if we have a recession or we have a lot more inflationary pressures that continue to push these costs higher and change that outlook on the margins, then home builders are going to continue to kind of stagnate.
Brian, what's your thought on this? Lawrence Yen said record high housing wealth and record high stock market will help current homeowners trade up and benefit the upper end of the market. When you think especially about the stock market momentum, do you see further unlocking of the housing market than fueled by the gains that we're seeing in the stock market?
Well, yeah, I agree with that. And I also think that there's going to be a tailwind from lower rates. I mean, I think at Morningstar, we think that the average 30-year fixed rate can actually dip below 6% next year, which is helpful. On the other side of things, we have home builders have too much new unsold homes. That was what I was looking for in that new home sales report, is to see an inflection where that coming down. We had 124,000 units unsold out there. For perspective, that's about 50% more than the historical average. Now, that's not across the U.S. That's sort of like in the Southeast and some of the areas where you're seeing a slowdown. But home builders have too many homes, and that's driven by the fact that they've gotten too aggressive with spec building during the last couple of years. So I think you got that. And at least our outlook here is that we avoid a recession, but we see slowing GDP growth next year, tariffs, increased inflation here up to 3%. And I just think that's going to
you're full of crap.
Consumer confidence.
I'm done with you. Now this is interesting. The 5 minute and the 1 minute on the orbs on the /ES. That's interesting. I would have thought I'd seen that. I pulled up at least this chart here. You got the double bottom and a two-headed snake. Yin yang right here. I'm just looking for reasons why I could have stayed in that trade. I'm gonna go make some coffee. Don't look at the 50, 60, 65, 90s. Yeah, I did. That's why I'm down in the dumps. Yeah, Dream Caroline, yes, sir. Coming up to a triple. Spy. It's now post 4 minutes past power hour. Oh, I gotta pay that. Pay my I don't know where my bill is. Today's Thursday. Apple broke resistance. We're at the top of the channel right here, of the flag right now, on SPX. Is Marley on?
Of their various memberships, as right now this has been seen as one of the most valuable types of customers in really the world, as they can continue to raise prices. It doesn't seem like it really impacts their overall subscription rate. Roughly 200 million Americans now use Prime, generating over $44 billion in last year. So this is a big deal, and I do think that right now you're seeing this effort from the FTC to curb a lot of the various accusations.
Using Prime's cheaper.
That you couldn't cancel easily. Obviously, in a fair marketplace, have to be able to cancel. I have never thought once about canceling my Prime membership, I'll admit, so I can't speak to that, but it is very much a valuable membership. They need to continue to have that loyalty.
I also have my Prime membership, but I did walk through the process.
There
when
she
we got
is.
The lawsuit, and it was 15 steps to cancel. So it
was
seems
difficult.
like a laborious process to do something that shouldn't be that complicated, but obviously Amazon, settling this out of court to avoid this month-long lawsuit. Shares under a little bit of pressure today, down about 1.3% for them. And of course, Oracle. We've got lots to talk about on Oracle. They're back in the headlines again. Although shares are down today more than the market on the whole. As we take a look at Oracle's chart here, I think they're down about 5%.
They are. So
See how she leans back? It just scares weird looking.
Rare sell rating, which is I'm not necessarily saying it's completely why we're seeing a 5% contraction, but a sell rating just feels so rare for a name that has been, one of our most steady and really outperforming names throughout the last month or so. So this is an interesting call. They did really say that overall they believe the market right now is materially overestimating the value of Oracle's contracted cloud revenues, saying that their role in single-tenant, large-scale deployments is closer to that of a financier than actually a real cloud provider with economics far removed from what model investors prize. They also said that their analysis is currently suggesting that their 5-year cloud revenue guidance equates to roughly $60 billion in value, indicating the market is already pricing in what I loved this term, a risky blue sky scenario that is unlikely to materialize. This is not, an entirely polarizing way of thinking. I have seen many that believe with all of their promised spend, with obviously a substantial expected stake, at least in that 80% really entity of the US-based TikTok, all of this to be said, they're spending a lot of money and their balance sheet doesn't necessarily support a lot of these endeavors to the full extent. But that's also saying, we're also talking everything's hitting all at once. I'm sure Oracle's navigated the ways in which they will manage their balance sheet. They are a decades-old company that has proven the test of time, but I do think a good point, though. They have definitely seen a recent, momentous swing to the upside on not really any major shifts that we're seeing into their business right now. Obviously forward-looking, and we're pricing in expectations for growth, but I understand the point of right now they think that we're gotten a little lofty here at these current levels.
Yeah, like you said, up 90% the last 6 months. Just looking at the last month since we've started to hear their name tossed around in this TikTok conversation, up about 24%. And I was refreshing actually my news alerts while you were talking to make sure we didn't get an executive order yet on this TikTok deal. But it is expected for Oracle to be announced as one of the 3 primary investors.
And also, we've seen other names thrown into that into that entity, that consortium of companies as it's been deemed. But I haven't necessarily seen overwhelming feedback of them being involved because, of course, they're part of the algorithmic side of things. There's still a lot of question marks, though, on what that looks like with, of course, that being the most lucrative aspect of the entire TikTok deal for a U.S. entity. So still a lot of uncertainties. I think that once we get clarity on this deal, that could be a huge lift to things here because I understand why there's this sort of teetering back and forth we feel right now in Oracle.
Yeah, some clarity expected to come today. Doesn't mean it will, but is expected to come today. And so let's move on to our last piece today, Lululemon. They got a downgrade. It just feels like every time Lulu comes up in conversation, it's about increased competition and their, the not a brand erosion issue, but just other popular brands taking market share.
Absolutely. And Needham today with a downgrade to hold from buy, did not give a price target, but they do believe the company's, as you said, competitive environment
66.10s right now.
Too challenging at the moment. They said consensus estimates now for fiscal 2026 are just too high, which creates a downside risk to these numbers over the next 6 to 12 months if the fundamentals don't continue to further deteriorate. So they're not the only one of this thinking. Baird yesterday also moving to the sidelines, downgrading shares to neutral from outperform, also trimming their price target. And as of Wednesday, amazingly so, about 68% of analysts do still have a hold rating, But what I found was fascinating, because I've covered Lululemon. I do tend to enjoy its products as well. So from a personal interest standpoint, I was curious. 34 analysts, we saw them move from 2 hold on the average rating from overweight in early September. That was the company's first time seeing now an average rating that isn't overweight since October of 2011. So that, I think, speaks to right now a more cautious tone on what has been a extremely lucrative but now very crowded athleisure market. And I've also seen various opinions on their new line of colors, where many were saying the color relaunch and some of the new products they're trying to roll out, they're just not resonating with consumers. So disappointing to my ears, but down another 4% today. And I mean, only fueling now, it's 55% loss on the year. It's a different Lululemon than we were once used to when they were in their true growth phase of like consistently beating earnings estimates.
Well, I did have a good millennial laugh you'll probably get to that Needham cited in its thing, the return to denim and jeggings as people moving away from Lulu's brand of leggings. So we're in a cyclical fashion trend.
Return to jeggings is a crime.
A return to
I will fight
jeggings.
against that until I don't have no more breath.
Thank you, Jenny Horn, for joining us to break down those headlines, the co-host of Next Gen Investing. And with that, I want to head back to Sam in New York for a look at what's coming up in the rest of the show. And also, how do you feel about jeggings, Sam?
Yeah, look, I'm all for jeggings, especially the ones that wrap around the bottom of your feet. Very comfortable and they don't ride up. So, yeah, I'm in. All right, well, coming up, we'll look ahead to Costco earnings and we'll zoom out and discuss how the retail investor impacts capital markets. That's next on Market on Close.
Yeah.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Nicole Petalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets, with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big
You froze up on us, Pepolini.
Whether you're an experienced investor or just get Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Welcome back to Market on Close. I'm Sam Vardas. Let's just check in with the markets right now, see how things stand at the moment. Of course, not long we've got left in the trading session, about 42 minutes to go now. We have got very much stocks on the decline today. We're pulling back for a third session as we have seen perhaps a bit of rethinking, perhaps a bit of rotation as we look across some of the sectors as well. Technology has continued to struggle, but of the 11 sectors, energy has been once again higher today, and this is interesting because it's despite the fact that we've actually seen the crude prices coming off a bit now off the 7-week or so high that we had seen. Talking to Joe Mazzola earlier today, talking about how this could be a bit of a speculative trade that we're seeing as far as this play is concerned. Looking at the yields as well today, obviously they've been ticking higher along with the dollar, particularly off the back of Powell's comments earlier in the week, and that was no doubt reinforced today by some of the strengthening economic data that we got
we're at
by the way of
support.
Q2 GDP revisions, which was a bit of a surprise to the upside there. Very much a resilient consumer. Let's see if that continues. And that is also, as I said, helping out things.
66.10s.
The dollar as well. And perhaps there has been some conversations, those yields ticking higher, keeping things in check as far as equities are concerned. Just looking across at some of those big tech names, I just want to bring some news to you regarding Intel now. We've got the Wall Street Journal reporting that in addition to Apple, this company has also recently approached TSMC, that is Taiwan Semiconductor Manufacturing, of course, and this is over a potential investment of manufacturing partnerships. Now, what is interesting here is that TSMC makes the chips for Apple, so it is a curious sort of tie-up. We are waiting for more details, but
135 to 185.
Journalists are saying right now, Intel has been obviously winning support
190.
from the US government and the likes of
Paper
NVIDIA.
trade.
We're going to be tracking.
The 66.10s, 135 to 190. That's paper trade. I didn't take it.
Visual, great. We have what I believe is a 3-month time frame here that shows the performance of Costco. I think that's in the kind of light blue. The broad market, by which I'm pointing to the NASDAQ 100, NVIDIA, and Tesla. Now, what's the point or what's the relationship here? There's not a whole lot of relationship. And that dynamic articulated at kind of the index level means we have seen incredibly low correlations. You have a name like Costco that is a big component of the NASDAQ 100. I think it's the 11th largest constituent. You have a name like Tesla that's top 10, NVIDIA number 1, and the index continues to plow ahead with relatively low momentum. And that has been the case for months and months now. Now, if you look at correlation measures, and there are a number, but the 3-month correlation, the realized correlation within the NASDAQ 100 is at all-time lows. And so this dynamic has been playing out for many months. It is typical to see correlations decline during earnings, and we're arguably at the very tail end here when the retailers are coming up. But the level of correlation is arguably unprecedented. The only other area where we got in this ballpark was 2017, which for those listeners that have been active in the market for years likely remember, it was an exceptionally low volatility year. And so that is the backdrop that we're going into here. And I do think, to your original point, that Costco is indicative of the relative strength of the consumer, of which we got some economic data this morning that looked relatively good.
So what do you think is driving this dispersion trend that is atypical in this particular market for the first time since 17?
So that's a really good question. I think we have seen a narrative-driven market since the sort of tariff concerns earlier in the year. And that's not wholly unusual. We're not seeing the behavior we saw across 2022 where it was like all rates all the time. And this backdrop, in general, is beneficial for stock pickers, and diversification, tends to work in this environment. We have seen some rotation in fits and spurts where small caps have performed, and then they bump up against some headlines. But much broader flows, whether retail or institutional, kind of continue to favor the big cap names that have been in favor for years and years.
and that trend is kind of unbroken. Here's a visual that sort of leads nicely into that point, ties in both the consumer element that we were just talking about, the retail buying. All right, let's explain what the audience is looking at here. It's net buying when we're above zero and selling exclusive to retail. Now, what is unique about this is that we have seen tremendous retail inflows in September. Let's give that some context. The average on a daily basis was 1 billion when you look across the previous 4 years. The average in September is 4 billion. Now, the bigger picture, you see pretty consistent retail buying. And I remember going back to sort of late April, and retail was sort of the only element of the market that was in there and buying that sell-off, buying the sale, if you will. And they have continued. That has been rewarded to this point, but if you look at measures like cash on hand or allocation to equities, they are relatively low on the cash side and very high on the equity side. So then it becomes a question of, if we see a pullback, are there kind of weak hands, or is this going to be an ongoing trend into the end of the year?
So what does that say about the durability of the rally that we're seeing?
It seems like, in my opinion, that the sophistication, and this is a point you make on the network regularly, the sophistication of the individual investor continues to ratchet higher. And the way that we as an exchange look at retail has shifted dramatically.
That's always been the case.
What they have on the market day after day is very, very different. And I think
traders are getting smarter day by day.
An increasingly significant role. With respect to the durability of the market, I suppose time will tell. And what I mean by that is,
we have 34 minutes left.
Does it take to see those numbers, those allocations really pull back? To date, there's been very few chinks in that armor, and those investors, on average, have been meaningfully rewarded.
Yeah, and as we've seen, very few chinks in the armor there, we haven't seen a great deal of increased volatility either. And you mentioned that when we were talking about Costco as well. So as far as index options, what does that indicate for them in the trading, and have you seen any trends emerging?
Great point. That is very much the lens that I typically view the market. And one way I look to distill that, so your point about relatively low volatility, and tying in another element of this year and the past few years, this interest in short-dated optionality. So I looked at the value of the one-day straddle in the NASDAQ 100 through time relative to spot. So if we think in basis point terms, and if we have that visual, it'd be great. And I can explain what that means. What we saw, here we go. You can look at it going back into 2022. Now, on average, that daily range, the straddle range, the predicted market range, is in the ballpark of 1 to 1.25%. What we saw at the end of last week was something closer to 50 basis points. Now, that is way lower than we have seen in quite some time. It's the lowest level if you look in terms of the percentile here, 1%. Now, the element that this doesn't factor in is that we have seen realized volatility even lower. And we're talking about a day today where the NASDAQ 100 is lower by 50 basis points, something like that. And so on average, that straddle has been overpriced. And so the bigger story is if and when realized volatility picks up, but the trend has been continued interest in this short-dated optionality, looking to monetize those exposures generally through spreads. And if I were speaking specific to Schwab clientele and the NASDAQ 100, that volume is up 15% in September relative to the month prior and 65% relative to last year. So you continue to see interest in index expressed volatility plays, and that's a trend that I too believe will continue.
Well, Kevin, I know if and when realized vol starts to tick upwards, we will have you here to talk about it, but we appreciate you being with us here in studio. That's Kevin Davitt from NASDAQ, and with that, I'd like to send it back over to Sam in New York. Sam?
Thanks very much for that, Marley. Okay, well, coming up next, we will be joined by the CEO of ChargeScape to discuss the company's efforts to expand the availability and capabilities of EV charging. That's next on Market on Close.
The market's down. I've had a good day. None of it makes sense. I'll be right back. Right back.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
I'm Diane Kinghall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
Sometimes, you know, you could have done better. The same goes for where you invest. Level up and invest smarter with Schwab.
We're back on Market on Close. CoreWeave announced earlier today that it's expanding its agreement with OpenAI by up to $6.5 billion. Now that brings the total contract value to more than $22 billion. This partnership is to power the training of CoreWeave's most advanced next-generation models through its infrastructure. And earlier this week, we also learned that NVIDIA intends to invest $100 billion in OpenAI, adding to the ChatGPT creators list of partnerships that include some of these heavy hitters: Microsoft, NVIDIA, Oracle, and of course CoreWeave. Now remember, 2 weeks ago, OpenAI cleared a very important restructuring hurdle to pave the way for a potential IPO, separating it from a not-for-profit entity and making it a for-profit entity. So that will definitely be one that we will be keeping our eye on and one to watch if it comes to fruition. Sam?
Thanks so much for that, Marley. Got a really exciting conversation coming your way now. One of the top headwinds facing the EV space is the availability of chargers. Several automakers are now teaming up to expand their EV charging capabilities. And joining us, I'm very pleased to say, is Joseph Valline, who's the CEO of ChargeScape. But thank you so much for joining us here at the New York Stock Exchange today. Just explain to us what your business does.
Absolutely. So ChargeScape is a joint venture of some of the world's largest automakers, including Ford, Honda, Nissan, and BMW. And we are focused on making EV charging simpler and cheaper for Americans across the country. And so what we do is we work with utilities across the US to unlock savings for EV drivers when they charge. And so we've got programs in several states, including right here in New York, where EV drivers are earning over $500 a year in cash simply by charging their vehicles off-peak. Elsewhere in the country, including in the West Coast and California,
how can they do that?
EV drivers are actually earning thousands of dollars a year in cash by exporting power from their EV batteries and selling it back to the power grid.
Okay, so the way I understand it is basically if you're an EV driver or owner, you're basically sharing the charging juice with the utility and they're effectively paying for it. Rather than giving you a bill from the utility, they're actually giving you money for helping them supply to the grid.
That's exactly right. And
Okay.
so what a lot of our EV drivers are doing is they are actually earning money back on their EV. And look, EV affordability is a big topic
Well, that's
right
interesting.
now. And automakers are really focused on driving down EV costs, including the purchase price, but also the ongoing prices of charging. And so in some states, including in Texas, we've actually got programs where EV charging is completely free through our partnerships. And so simply by sharing your juice with the utility, letting us optimize your charging a little bit in the background, maybe overnight at home, you're ultimately going to save a lot of money on your charging, and some of our customers are even earning money back, turning their vehicle into an asset.
Okay, I suppose it's not everybody's cup of tea because you have to be reasonably flexible in order to do that. So can you sort of explain what kind of EV owner this would appeal to?
Yeah, so this is mostly appealing right now to EV owners who charge at home.
Right.
And about 80% of EV charging in America does happen at home. And so you do need to have some flexibility. But typically we see EV drivers coming in and plugging in at home somewhere in the evening hours and then unplugging the next morning. So typically plugged in for maybe between 12 and 14 hours at a time. But on average, they only require about 2 to 3 hours of charge to get their battery to where it needs to be. So what we do is we sort of play with that flexibility within that 12 to 14 hour window to save the utility money, and that money gets passed on to the EV driver as cash.
Okay, and you mentioned this joint venture is with the likes of BMW, Ford, Nissan, and Honda.
That's right.
So you have to be a driver of those particular cars.
That's right.
What's going on
We
with
are adding
Apple?
additional automakers next year, but these are probably the four most kind of innovative automakers who are rolling out this program initially to their customers as a way to drive down EV charging costs for their customers.
Can you tell us who you're going to be partnering up with? Is Tesla one of those names?
Unfortunately, I'm not able to say, but it does include some of the largest EV automakers.
Yeah, and talk to us about the energy side of the equation, you know, as far as the US grid, because, you know, there's been a lot of conversations around this fact that this needs a good old upgrade right now, and I'm just wondering at what times and, you know, in what circumstances this kind of extra power would be needed for the utilities to sort of lean on some of this extra juice.
Yeah, I think historically it's really sort of depended on the region in which the utility is located because the power grid is different in different parts of the country. But one thing that we've seen recently is with just the rise of AI and data center demand, it's driving electricity demand through the roof really sort of across 24/7 time horizons. And so what that means is that utilities across the country now are looking for extra juice anytime they can get it to meet this increasing data center demand. So actually we just announced a pilot with Silicon Valley Power and Nissan, where Nissan drivers are actually selling their EV battery power back to Silicon Valley Power when they have it, when it's convenient for them. And Silicon Valley Power is actually using that to meet the data center demand in their service area.
Okay, and so when you talk about the consumer, or I should say the EV driver or the owner here, I mean, when you talk about what's in it for me, it's the fact that, you know, they could be getting kickbacks for obviously supplying some of this extra stuff and from their charging. I'm just wondering, you know, with the...
Okay, we're at a 1, 2, 3 here.
Credit set to expire.
We're at a 1, 2, 3 on SPX. That's a SPY. The 6505s. 1, 2, and 3 of them. At 110. Hey, little sister, what is going on? 110. No, 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 no. $128. God darn it. Come on, break out. We've got a 1, 2, 3 here. I'm seeing if it. So far, it ain't doing much. Hello, KG. There we go, 130. 1 'em, 2 'em, 3 'em. Should go ahead and sell them. $125, $130. $145, yay! $145. $170. Oh, I love it when a plan comes together. That kind of makes up for that one I sat on. That could have made $3,000 on. It's the most wonderful time of the year. It's the most wonderful time. It's the most wonderful time of the year. It's the most wonderful time of the year. This girl's trying to take everybody's job. I'll be right back.
Supportive range to look at to the downside here. If we overlay volume profile and standard deviation channels, we can see that the area where we topped out, this resistance area that we highlighted, corresponds with this heavy trading activity area. So a bit of a congestion point to work through. The +1 standard deviation channel lines up closely with those old highs, and then we have our moving averages consolidating down here near 260, another volume node.
All right, and I can't imagine IBM being one of the most widely traded options names, but how was volume today, and where are we seeing the most open interest?
Last I checked, about 100,000 contracts traded, 80-20 in favor of calls here, 80-20%. So not a slouch, but definitely not the most active tradedly name here. And to be fair, 10-year chart now from this perspective, pretty nice uptrend here. So October 17th expiration, 22 days out here, gives us an expected range of about 6.3%, our purple shaded area here. Notice that the lower end lines up with our 265 level pretty closely, whereas the upper end, 297.50, pretty close to those old highs. So that could be some extra weight to this projection here.
And as far as any notable trades that you saw today, were there any?
Looked like a bigger closing trade, -300 December 19th, 235, 270 call vertical and a 2025 net credit. Seems like a closing trade. That doesn't really make any sense for an opening trade here. A similar trade was done back on August 18th. Looks like they would have doubled their money, about $750,000 or so back of napkin math.
Well, Rick, we appreciate you breaking down IBM for us and having a broader conversation about quantum computing and algorithmic trading and even fantasy football. Lots we've covered on the show today, Sam, so I'll send it back to you in New York.
Thanks so much for that, Marley and Rick. Coming up, it's time for Overlooked Stocks, and Alex Coffey will join us. He has his eye on Amerisco heading into the close. A bit of an energy theme today as well. He'll break down the news and what you need to know next on Market on Close.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com.
We're at number 4.
First day, so sometimes
Should start to get real volatile right here.
you could have done better.
Please.
Same goes for where you invest. Level up and invest smarter with Schwab.
What's up, Carl
Oh,
Nation?
shit.
It's your number
Really?
one broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Russia better watch your ass.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl?
Schwab, a modern approach to wealth management.
Stay connected to the markets with Schwab Network. Tune in 24 hours a day, 7 days a week on SchwabNetwork.com.
The Kremlin
And
says
on all
that.
favorite streaming services.
The Kremlin says that. Russia declares NATO and EU are now at war. NATO is at war with Russia, says Kremlin, as drone incursions continue in Europe. NATO, EU declared war on Russia through Ukraine. Uh-oh. Four days ago, Putin to issue war declaration against NATO now. Moscow declaring war on NATO. NATO is at war. It's not good. This is not good. Should have a knee-jerk reaction in the market, and then it will bounce back strong, but we'll see. These options here didn't go up much. I didn't take it, but they didn't go up much. None at all. Well, I got busy looking at this war crap. Sends a chill down my bones.
And others, but it is a consistent provider and a partner for many companies across the world, not only in the U.S. to help find those energy needs. I know you mentioned, I think it was UBS, but Baird, as well as BNP Paribas, Stifel, B. Riley, all also in a bioequivalent camp of analysts.
Now it finally goes up.
Adjusted their notes or reissued them at least in the last several weeks in the month of September. So there is optimism.
85 to 155. I didn't take it.
That the analyst today from Jefferies has that $39 price target, because on a technical basis, the start is certainly improving, but 40 looks like a pretty key battleground. So in that 39-40 range, if they get through that, I think bulls would feel pretty comfortable.
Yeah, and it's interesting. I'm just looking at a chart. I mean, early September, it was basically neck and neck with the S&P 500 now sitting up almost 50% year to date. So it certainly has been on the rise over the course of the month. Thank you so much for that, Alex Coffey. Really appreciate you getting us across at that stock. I'll send things back over to Marley in Chicago.
Thanks so much, Sam. We're nearing the end of the market session. That means we'll see Kevin Green. He'll be joining us to break down the levels he's watching on the S&P 500, also to break down today's trading action. Next, much to talk about still on Market on Close.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
Jenny, we want you to eat some cheesecake. You need it bad. We're worried about your nutrition. You gotta eat, girl. Drink a glass of milk like Grandma says before you go to bed. Please. If you were my girlfriend, I'd put 10 pounds on you overnight. Amazon's moving up a little bit. Come on, Schmevin.
From that, hopefully to the upside here, but I would say that there's probably more pen risk sitting at that level. Obviously, we saw some pressure to the downside to at least start off the day, and we did recover a significant amount, I would say. But obviously, the volume side, if you're kind of looking at the E-mini S&P 500 futures, we may have the largest volume day since September 2nd. And I think that's actually very key because a couple of other things actually happened on that trading session. Volume obviously was very outsized, and volatility also increased to the upside. We had the highest volatility day
Gosh, 80 to 140, just like that.
Leading to tomorrow, which is going to be Friday, we will have a weekly expiration, a big expiration until we get to the quarterly on the 30th here. But overall, it was actually a little
6605s.
Pretty close to the 20-day moving average for the S&P 500. Got about 9 points away. I think that's actually very key for us for tomorrow. 3 days in a row to the downside, getting close to a moving average, a key moving average.
Yeah.
And we have a bounce day tomorrow, and that's what I think the market's really setting up for.
Oh.
And Kevin, you mentioned, we haven't seen volume like this since the earlier part of the month. You also said that we saw the volatility tick up today as well, like we did back in early September.
Yeah. Today top tick was the highest we've seen the VIX since September.
I mean, Marley does ask good questions every once in a while. Well, not a bad day. I just got kind of depressed after watching it thing go up to $1,800. I mean, that would have been. I didn't have that many contracts, only had 2, but jeez. Nailing the bottom and watching it just fly fast. Those are the kind of trades I'd really want to stay in if I could ever get a chance. I used to be able to. When Tesla had its run, and I'd take them things up to $2,000 to $3,000 a day a piece. Some of them SPX calls would go to $8,000, $6,000. Now it's like 2, but still yet, I mean, they're cheaper. Sometimes it doesn't bother me that bad, and sometimes it does. What? I said we're going to go to $1,000 with 1,800. Well, that's just a spectacle guess. I mean, it's that ain't logic. There's no logic behind it. Well, I'm going to get out of here and do my laundry and work on the kitchen and have a bowl of soup and put the chicken back in the fridge. I was going to cook some soup today, but I got time. I'll do it tomorrow. I got a long night tonight. I want to get some rest. I got to back off on this coffee. I've been drinking a lot of it lately. More than I have. I mean, I was on a 6-month roll where I didn't have any coffee but on Sunday. Now I'm having 2 or 3 glasses a day with creamer. I think I had 4 today. We had a special guest today. That was the bear. He tried to talk me into taking that trade, and I wouldn't do it, and I waited for the bottom, and then I took it, and then he laughed at me because I got out too soon. This guy. So I just want to say thank you, everybody. I think we got a good room in here. Not a lot of people. That's all right with me. You get too many people in here, gets a little confusing sometimes, and too many egos. Nobody's got an ego in here, except me. What am I again? I already forgot what I am. Narcissist. I had to look it up. I've heard the word before, but not by me. I mean, called Trump a narcissist. If I had billions of dollars, I don't know what. I don't think I could be around too many people. I'd act like a poor person. I really would. I mean, I'd get me a nice house and nice car, but I don't think I'd get any Lamborghinis or anything like that. Maybe a couple hot rods. I'd definitely get a house with a pool looking over the ocean in Hawaii. Spend the rest of my life there. I like the weather there. Year round, 82 degrees. So, yabba dabba do, we'll see you tomorrow. I just kind of got disturbed because I didn't let trade run up. I usually don't get that emotional. But yeah.